Is going after a US lithium company. Lithium, of course, has been under pressure as EV sales have not lived up necessarily to people's high expectations, Guy.
10 seconds to go, Monday morning. Let's talk about the opening trade. Here we go. We're expecting a little bit of upside. Does that fade quickly, though? We're going to watch the opening trade coming through right now. London expected to open higher, but it's going to be only 0.2–0.3%, I think, is the anticipation. As you can see, the FTSE 100 climbing a little. We're up by 0.1%. Keep an eye on the miners. We are looking to the China opening tomorrow. We are looking to this update from Chinese authorities as well. This press conference has been announced, this briefing that's been announced. Is that going to be pro the miners today? So we're up by 0.3% in London. The Stock 600 a little less, only up by 0.1%. The IBEX, though, is up by 0.4%. The CAC up by 0.4% as well. So a positive start for European markets at the get-go of trade, but it feels like we're kind of pricing in the legacy of Friday rather than looking ahead, maybe, Lizzie, to what comes throughout the rest of the week. What is happening below the surface?
Yeah, I mentioned we need to keep an eye on those German industrials after the drop in German industrial orders this morning. We're still waiting for the DAX to open, but elsewhere you are seeing basic resources at the bottom of the basket, lower 0.2%. All but two sectors in positive territory, though. Retail leading the gains, higher 0.5% this morning. Banks just behind, higher 0.3%, but healthcare also in the red, Anna, lower 0.1% this morning.
It does seem that on that basic resources story that you mentioned, the only sector in negative territory then, Lizzie, and it is Rio Tinto that is at the bottom of that list. It's currently down by 0.9%. We've heard about their intentions with regards to lithium product and the market not responding all that favourably. We will get an expert voice, though, on the metal space coming through in around 29 minutes' time. We will talk to Evie Hambro about what he sees in metals, and M&A has certainly been a big theme there. The best performing sector then is around retail. We see some of the usual retail names in there in that mix. Consumer products and services also up, but we're not talking about big moves here. I suppose Kering not doing too badly, up by 1.3% this morning.
Is this a China story? Is this the boost to Chinese consumers? You see also Citi upgrading Chinese consumer stocks.
Yeah.
Is this the read across to Europe? Luxury's
up quite nicely. So Richemont's up, LVMH both tracking higher. So that's maybe an indication that that is the story. It's interesting that Morgan Stanley's come out this morning and actually upgraded cyclicals and downgraded defensives, but Nestle is, in terms of the points added this morning, the highest. So the kind of the staple story is actually doing relatively well, which is interesting. Novo's soft, Sanofi's soft. So some of the healthcare names are a little bit softer as well, which is worth bearing in mind. Is there a clear theme this morning? I'm not sure there is.
No, we're seeing a couple more sectors drop into negative territory, to your point then, Guy. Healthcare and chemicals, both now pretty flat, along with basic resources, which is down 0.2%. I mean, there is that sense that consumer products are doing a little bit better than the rest, but not by all that much, up by 0.6%. And we look at US futures, and they are ticking down, still down by 0.2%. Let's put this together from an equities perspective. Let's talk to Maria Weitmaner, who's head of equity research at State Street Global Markets, and joins us this morning. Maria, very nice to see you this Monday. We're looking for a sort of uniting theme. I'm not sure we have one in terms of where stocks are trading, but big picture, your thoughts post-Friday about stocks, because I think you pointed out in your notes how it was really interesting that stocks managed to rally despite we saw higher yields and reduced expectations of rate cuts from the Fed, and yet this was positive for stocks. What did that reaction in markets tell you?
Good morning. I think the bigger picture is still very, very constructive. So we have pretty much every major central bank and quite a few like emerging market central banks cutting rates. And economies are chugging along, and we're about to get into an earnings season, which is likely to be positive. So I think, broader speaking, I think it is a constructive outlook. We have to be a little bit more careful. What are the key drivers? Is it still multiples? Maybe less so, as we're probably not going to get like a lot more very aggressive rate cuts, but direction of cuts is there. And then maybe we look at profits where we're likely to see more companies maintaining their margins, and where we're getting more and more problems. So I think it's yes, overall kind of a balance in terms of drivers, but constructive outlook nevertheless.
Okay, I want to home in on that, or zoom in on that earnings story then, Maria, because I was reading some Bloomberg Intelligence analysis that says we're now expecting, analysts as a whole are expecting third quarter profitability to rise by 4.7%. That's down from 7.9% in July. So since July, analysts have downgraded their expectations for profitability amongst corporates, and yet you still think that the earnings story is going to be a positive one. What should we watch for?
Yeah, I think there are like a couple of points to make. I mean, normally, when earnings revise lower during the quarter, that's somewhat constructive in the sense that it's a lower bar for companies to beat. So that's probably the first point. So that's kind of a good setup for earnings. But secondly, I think it's really important to look under the surface. And what we are seeing within this 4.7% of earnings growth expectations, we have three sectors where earnings are expected to contract. So with energy, materials, and industrial. So that's not a good read for kind of industrial manufacturing part of the economy. Financials, about the first report, they expect it to be flat. That's again another concern for me, given that investors actually, those stocks have done quite well, and investors are really overweight that sector on kind of expectation of resilient balance sheets. So that's potential concern. And yet again, I wouldn't be myself without mentioning that tech is expected to bring majority of the earnings growth to this quarter. So that's where the strength is still there. So that's an important
for me, given that investors actually. So you're very optimistic. You're very optimistic about big tech in particular. Why can't that optimism be shared to the small caps? Why are you so skeptical about them?
And yet again, that's my biggest area of skepticism. I think my favorite chart in my client presentation is looking at proportion of loss-making companies in small caps. It's 22% in small cap companies that are losing money. That's the third highest level. The other two only being during recession time. So small cap companies are really, really struggling. Within large cap companies and kind of like tech and brands, it's only 3% of companies that are losing money. That's the lowest in this century, so since 2000. So I think that's a real difference. Small cap companies are really under pressure from economies that is not collapsing, but it's slowing, and it's hitting smaller companies. They have the highest cost of financing. They're selling to consumers that is struggling the most. They're more cyclical. That's where the problem is. And that's definitely the part of the market that's under pressure, not the large caps.
And how much volatility, Maria, are you expecting after the US election?
I do expect a lot of volatility, maybe not that much kind of driven by election, because I think it's really interesting. So we run this product called Narrative Map in our research, which looks at what major themes are driving the market. And it's really not elections. It's economy, it's Fed, it's labor market. That's where the volatility is coming from. But volatility will be high because, to me, the key reason for volatility is that investors are crowded into expensive stocks. They've been buying growth stocks, they've been buying quality. That's expensive. So any shock to anywhere, election, economy, payrolls, that's all translated into volatility in the market because, investors own expensive stuff. So that's the risk.
Maria, what is the risk that the Fed delivers rate cuts and continues to deliver rate cuts at a time when the US economy is doing okay? It ends up providing lots of liquidity, of which there is already significant amounts, and as a result of which we end up in a situation where we get a melt up in stocks, we get a boom in stocks, and then potentially there is the risk of the reverse of that, a bust in stocks. Are we setting ourselves up for that? Is that a kind of how high on your radar screen is that risk right now?
Well, I think I really want to enjoy the first part of your journey where Fed is cutting into economies that is slowing but not collapsing. So I think that's what market is focusing on right now. We see investor sentiment is improving. People are buying into it. And I think what Fed is really trying to do, which actually really huge contrast to European central banks, to BOE, which I think investors should really appreciate in their portfolios. Fed is cutting into economies that is somewhat robust. So they're trying to really trying to achieve this kind of, hard to achieve soft landing, which while what ECB or BOE are doing, they see economies that is quite slow, and so they worry about kind of residual inflation and really not providing enough support. So I think economic outlooks are really different, and I really want to bet for kind of with US where you're having support of a constructive backdrop, which is really rare, really.
Can I buy Europe to play China?
No. In one word, no. Because for once, I'm not entirely sure I want to play China. I mean, I see what in China, I see, I don't know, Chinese authorities ordering Chinese stocks to go up and throwing some money to it. They're also really encouraging Chinese consumer to spend. But the jury is still out there. Would Chinese consumers spend? And would they spend on European luxury goods or European goods? Big question mark. So far, Chinese consumer, we see really very low consumer confidence. The retail sales are really struggling. So we do need to see Chinese consumer to spend. Once we see that, and that would be a massive trade. But I'm still skeptical. Would they spend or not? They've been bruised by kind of common prosperity, salary clawbacks, and just overall indebtedness. So they're given money. Would they spend or would they save? That I think is the key question to think about Chinese stocks, medium term, and European stocks.
Okay, Chinese propensity to spend. Thank you very much, Maria. Really nice to see you. Have a good week. Maria Weitmeier joining us, Head of Equity Research at State Street Global Markets. On to the Core 6.
Let's go. Exactly. Let's go to the Core 6, see what's happening. This is what the biggest, you could argue, most important stocks in Europe look like this morning. We can debate the list, but this is what it looks like this morning. Novo's up, LVMH is up, Ferrari is up, Schneider is up, Nestle is up. They're actually up decent amounts as well. The car sector may be lagging a little. Ferrari's the only major European auto stock to be in positive territory, I think, over the last 6 months. But it's interesting to see a little bit of weakness in the chip space this morning. Let's get some single stock stories that we're not watching on the Core 6 list. Joe's got those. Over to you.
So we are continuing to see a move higher in Ubisoft, Guy, up around 5% in Paris this morning. Bear in mind, in the context of that 35% gain that we saw on Friday on the Bloomberg exclusive around Tencent and the founding family of the company looking at a potential takeover, a buyout of the firm. Now, we have had that statement in which they say that they are focused on their strategy and will update if any new information comes to them, but as such we are still seeing that gain extending in Paris this morning. Then in terms of Italy, there's a bit of M&A over there as well. Italgas doing a deal for a big rival there, potentially including debt. This is worth around 5 billion euros, so more than its own market cap. So a little bit pricey perhaps on that one, but that stock managing to still gain around 0.5% today. Then staying in Italy, we've got Nexi reportedly agreeing a contract extension with UniCredit. This is the big payments firm, payments processor over in Milan, up around 1.4% on that one. A bit of positivity coming through. Then in the commodity space, an interesting one. First of all, we've got Shell on the production update. A lot of that looked slightly weak, in fact, but potentially just moving with the broader market on that one. And we were also looking at some of the mining stocks. We'll take a look at Pirelli, upgraded over at Kepler Chevreux. Now, Kepler does actually downgrade price targets across the auto space today, but it likes Pirelli as a potential standout for that one. Then going the other way, Bank of America becoming more negative on EU software today. They downgrade Alton and a bunch of other stocks That one's listed in France. We're falling 3% there. And then a breaking news on the rating changes for Neste. This one is coming down at Exane. BNP Paribas, they go underperform on that one, saying the renewables margins are weakening. That one declining over in Helsinki today.
All right, Joe Easton from our equities team, we thank you. Anna, I did say that we should keep an eye on the German industrials. The DAX is open now, flat to the downside. You've got Mercedes, BMW, Continental, Siemens Energy, all in the red after that drop in German industrial production. But Daimler eking out gains this morning, as is Porsche. And as a sector, industrials and goods and services up 0.25% across Europe.
The car set, we're waiting for the Chinese response, aren't we now? We're going to...
There were some words, weren't there,
the
on Friday?
The European authorities announced, well, we had the vote last week. Europe is going to go ahead with these tariffs at 45%. How do the Chinese respond, and how does that affect particularly some of the upper-end German car makers? I think that's an overhang for the market in terms of some of these car stocks.
Yeah. Absolutely, we'll continue to watch that. Coming up on the programme, Commerzbank's CEO pours cold water, talking of Germany, on any potential merger with Italy's UniCredit, warning a deal could cause more headaches than it's worth. Details next. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Tuesday, a Bloomberg exclusive with a Wall Street titan. JP Morgan Chairman and CEO Jamie Dimon sits down for an exclusive interview with Bloomberg's Lisa Abramowitz, live from the JP Morgan Techstars Conference in London to discuss the global economy, risks and opportunities around AI, and the U.S. election. Tune in Tuesday at 2:30 UK time, 9:30 Eastern, only on Bloomberg Television. Context changes everything.
Monday morning, let's call it 18 minutes into the session. This is what the picture looks like, as you can see. Not much action, to be brutally honest. There's a lot of unch kind of effectively being demonstrated on the screen in front of you. It is a huge week, though, coming up. Feels like we've kind of priced Friday. We've done a little bit of that. We've faded that. We're now looking at US futures. We're a little negative. We've got so many risk events coming up throughout this week. It's going to be fascinating to see which one has the biggest impact. Let's talk about some of the single stocks that we're watching this morning. In an interview in Handelsblatt, Commerzbank CEO Bettina Orlopp says that she sees risks in a takeover by Italy's UniCredit. Some are questioning whether or not this is cross-border mergers, whether UniCredit is really that Italian. Orlopp adding that any potential deal could lead to a loss of customers and create disadvantages for German companies. Let's get the details of this story. Bloomberg's Ollie Crook joins us now. Why so negative, Ollie? She's coming out with lots of kind of negatives as to why this deal wouldn't happen. What I'm not hearing are a lot of positives as to why UniCredit would be better off as an independent company.
Yeah, well, listen, Guy, that was for a couple of weeks ago in terms of giving the sort of positive vision of the future that she's got for the bank, and she laid out her kind of 3-year plan for that, a couple of weeks ago at that Bank of America conference, which really turned into the sort of UniCredit Commerzbank show. But right now she's sort of highlighting in her first interview she's given since becoming CEO all the risks that are associated with it. And really she sort of leads with one that is very close to the sort of German heart, which is creditworthiness, saying that this could be a major sort of hit to Commerzbank creditworthiness. Another thing that she highlights is because of some of the overlap with the other bank that they own in Germany, they could have to shed some clients. And also talking about basically the fact that if they don't have the headquarters in Germany, that in times of crisis, as you could arguably say that the German economy is in right now, that the decisions that are made that are far away from the economy are not really for the sort of best interest of that economy. Now, of course, she has then go on to say that basically the only sort of path forward is her plan, that 3-year plan, which requires Commerzbank to remain a standalone entity. It is all about boosting profitability. What I found was interesting in this interview, though, is that she was asked at what price does this deal make sense. She wouldn't answer that, but she said that she was confident, and you can see the share price on your screen is at about 16.70 right now, that she could get the shares up to 25 to 30 euros a share. Guys, that has not been a reality for Commerzbank since 2011 as sort of at the most recent time, and that is some distance away, and that is with this UniCredit sort of premium that's already priced into the shares right now.
So that's the Orlopp side of the argument. What are we hearing from Orchel on the UniCredit side of the argument?
So listen, he spoke to The Economist over the weekend and really sort of making some of the same points that he's been making throughout those, sort of pushing back on some of the issues that we've heard from the German government, saying that he had been totally transparent about this, that he has sort of taken the Germans sort of agreeing to sell it to him as a sort of tacit sort of green light to move on the bank. What I also think is interesting, though, is he did highlight that the fact that there is not a huge amount of overlap between the current clients within Germany and Commerzbank, and that there are synergies there. Critically, though, what I thought was interesting is making the case to the public that any sort of takeover or merger would not lead to huge amounts of branch closures and job cuts. He was saying that if there were going to be any job cuts, it would really be at the management level and the headquarter level, but that he would, largely speaking, keep the branches and sort of lower levels alone. Does that bring enough confidence to move the conversation forward a little bit? I'm not so sure.
Ollie, thanks very much. Bloomberg's Oliver Crook joining us from Berlin. Let's check on another corporate story that we're keeping across today, and that is Ubisoft. The share price of Ubisoft up by 3.4% after a stunning rally during Friday's session. Ubisoft saying this morning that it's focused on executing its strategy after Bloomberg has reported at the end of last week that Tencent and the founding family of Ubisoft are weighing options, including a potential buyout of the French video game developer. There you see the share price move today. That's on the back of a very strong move during Friday's session. Let's bring in our deals reporter, Manuel Bagori, who can take us through some of the detail here. So, Manuel, why would Tencent make such a move for Ubisoft?
Hello, and an interesting move indeed, and a rare one, because we haven't seen a lot of cross-border M&A from China recently, especially with big tech companies laying low for quite some time. So definitely one that would make sense given where the share price of Ubisoft has been trading at lately. I mean, keep in mind that shares of Ubisoft have plunged over the last few months more than 50%, all the way to Friday after or before our scoop, better say. I mean, it would make sense because it's kind of like giving them a foothold in the gaming industry in Europe. It's an interesting proposition, one that they know they've been partners for quite some time, and they would be potentially doing it with the family, so ensuring that the current talent at the company remains in place. So we make it definitely for a good transaction for Tencent potentially.
Manuel, just talk to me about who else could be interested. There's talk that private equity could be interested. There's talk that KKR, that Blackstone could potentially be circling as well. What would they offer that would be different? And to us, what extent is the current transaction that's being talked about a defensive move?
Yeah, that's a very interesting point, Guy. I mean, it's one that has been talked about for quite some time. The company has been struggling. They cut the guidance for earnings recently as well on the back of some delays for some of the titles, and they've been under pressure. I mean, some of the minority investors have been very vocal about the company, pushing the company to explore options, either a take private or a sale to a strategic investor. And as you well said, some of the private equity firms in the industry, the biggest ones, have been circling around. I mean, definitely it's a company, an interesting case study for a go private deal and see if they can continue to grow the business without the pressure of the public markets. Whether or not Tencent and the family or ultimately another buyer shows up remains to be seen. Our understanding is that there is a lot of options on the table to try maximize value at the entity right now.
Thank you very much, Manuel. Deals reporter Manuel Bagori with the latest on Ubisoft. More corporate news flow. This also in Paris, in fact, Atos. We know that the tech business, the IT business has been struggling for some time, has been in conversations with the French government and putting out a statement today, just reminding us essentially that those conversations are ongoing, saying that the confirmatory offer that they had from the French government has now expired and no agreement was reached. But they've sent an alternative proposal to the French state, it seems, to try to continue those discussions. This something of a strategically important asset, it would seem, in the views of the French government.
There's a defence element to this, so they've always been very interested in what is happening here. So yeah, I think the French government will be paying a great deal of attention. What is a strategic asset for the French, though? I think is an interesting question that always seems to come up, Lizzie.
Yeah, and it comes in the week that we, of course, get the French budget. Michel Barnier delivering that on Thursday, which comes, of course, at a time when France is really struggling to take its deficit. The politics are an absolute mess. I feel like his new job makes his Brexit negotiations look like a doddle.
Well, he's had good prep, hasn't he, for all the struggles and all the trying to corral people onto the same message, which he's going to have to try and do to avoid some sort of no confidence. I mean, the fact that Le Pen has not pushed that button is material, I suppose, but she seems to be somebody to watch on that front.
Yeah, it's going to take longer. It's going to be harder, seems to be the message. Is France going to have to deal with austerity? Is France ready to deal with austerity? And once the reality of that bites, how does the French population feel? Is Le Pen effectively... She's not focused on this story right now. She's looking ahead. She wants the presidential election. That's what she's got in her sights right now. The more chaos, the more trouble, the more pain, you could argue, maybe augments her efforts as she looks to maybe take the Elysee rather than taking the prime ministership. I think that's the question that everybody's watching in France so carefully. What is it? Where is this going to take us in France, and how is this going to change the politics?
Yeah, and at a European level, as I say, does it lead us more towards that slow agony that Mario Draghi set out in his report? But coming up on the programme, it is 1 year on today from the October 7th attacks on Israel by Hamas. We're going to bring you the latest from the region and, of course, the impact on the oil price. We do have Brent currently starting the week higher now at $78.49 a barrel. We'll go to the Middle East next. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Minutes into the Monday morning session, this is what the picture looks like. So the initial bounce, which was basically kind of a little bit that we didn't price in Friday from the payroll story in the States, has now faded. As you can see, we are coming a little bit softer. There's a bit of red on the screen now. It's a bit of M&A in the market as well that we need to be factoring in, and that is meaning that the basic resources sector is the worst performing sector. It is down by half of 1%, and Rio is doing some of the damage in that space. This after we have had confirmation that the mining giant has made an approach for Arcadium Lithium. The move confirmed the speculation over the weekend. Everybody's turning their back potentially back to growth, to M&A. Seems to be a theme. Major miners looking to increase their exposure to the energy transition metal story at a price that now seems much more reasonable. Evie Hambro, who is the head of thematic and the sector team of BlackRock Fundamental Equities, sitting around the table, something of an expert in this space, and he's now fully recovered from Metals Week, which took place in London last week. Nice to see you.
Morning, Guy. Thank you.
Everybody's getting very excited about a China briefing tomorrow morning, that we're going to be seeing maybe some money put behind the words, and that this could give a further lift to some of the metals. We've seen iron ore up quite decently overnight. Is the China story really to you? Do you feel that this is something that has got legs? Do you think the Chinese have changed their attitude, and what does that mean for the metals market?
Yeah, I mean, obviously the timing that we had on that initial kind of burst of enthusiasm towards China with all of the announcements really kind of set the LME week kind of gossip channels running as hard as I've seen. But you look at some of the patterns in inventory moves and so on ahead of that, and they were pointing in that direction anyway. So, at the end of the day, China has been weak. There's no doubt about that. The world's largest commodity consumer. But they've been weak in the context of the world's largest consumer. Yep. So actually, the consumption's been going up in many of these areas. It just hasn't been going up at the kind of exciting levels that people would have thought about. So you look at like copper. We've got decent levels of copper demand growth going through. Steel, iron ore, etc. Look at some of the industrial metals outside of that. It's not a bad picture at all. So if we did get anything substantial from China, it's like we're kind of just kind of elevated even further and tighten markets. And that's what we've been thinking about for the last year. I mean, there's been this negative sentiment cloud that's been overhanging the commodity markets that's allowed them to kind of drift. And if that's removed by what China's doing, then it's a pretty exciting time ahead.
If that's the case, do metals equities, do the miners look cheap?
The miners look cheap, full stop. We don't need the China situation to dramatically improve. You've got valuations today that are way below their long-term averages. You've got very, very strong balance sheets. You've got good levels of margins across most commodities, with a couple of exceptions. If we did see some extra demand in a tight market, that'll lift prices, and if it lifts prices, then the profitability will go up even further. So we've been positive on the outlook for equities. It's been an up year. It hasn't been a massive up year. Nothing like as much as we've expected. But take copper, for example. The price peaked at $5 and a bit a pound, earlier in kind of May timeframe, got down to about $4, and now kind of $4.50, $4.60, back through $10,000 a ton. That's a pretty healthy price.
And what about this story? And Guy mentioned the story around Rio, and that seems to be, this morning, the news flow that seems to be driving the sector. And I wonder what that tells us about M&A and animal spirits. You've just been at LME week, and I wonder what you picked up on that theme and what this tells us about the sector and where we are.
Yeah, I think that there were a lot of takeaways from last week. I think the first thing is that, and it's incredibly clear when you look across the valuation space, is it is much cheaper to be able to go out and buy than it is to build. You look at the capital intensity of building new production today, it trades way above the valuations that we see in the market. So it's no surprise to us to have seen these kind of animal spirits in the context of M&A, running for most of this year. We've seen a number of, transactions attempted. Nothing as yet kind of concluded in the bigger space, but I don't think that's going to go away. And recent examples just kind of highlight this trend. In the lithium space, lithium prices were a lot higher a few years ago. So to try and take advantage of them at lower price is probably more sensible than buying them at the higher price. But the outlook for the EV space is tough. You've seen lots of downgrades coming through there. But if we fast forward 2, 3, 4 years into the future, which is often longer than most people's investment horizon, and these big companies have to think in that much longer horizon, it could be a sensible thing for companies to take advantage of weak pricing.
Do you think lithium prices have bottomed then, given what we've seen in EVs?
Yeah, well, we're starting to see production growth plans deferred, which is a signal we always look for. We're seeing the prices trade below some of the marginal costs. We're into the cost curve, so we're seeing some production being turned off as well. Those are signals that you would typically look for when that marginal cost production is coming out of the market, and you do start to see prices level out. And I guess we need to see demand come through to lift it for higher from here.
I mean, you say it's cheaper to buy than to build. Do you think actually more investment is coming? And if it is it going to be too little, too late, given the time lags it takes to filter through?
Yeah, I mean, there are so many challenges with building stuff. The risks are absolutely enormous, and they get more every year. The delays around ESG that we've now got to factor into all of this, the permitting timeframes, actually finding the stuff. The exploration success story has been pitiful for many, many years across the industry. And so there are huge challenges in building stuff, let alone the cost. I mean, you look at the capital intensity today, the amount of money that's going to be needed to be invested is way bigger than these companies can afford. And the other thing you have to think about, this sector is so relevant in all of our daily lives, but everybody takes it for granted. We think that the commodities are all here, we're going to be able to use them, we're going to be able to build the stuff that we need. The market cap of this space is less than the daily moves of NVIDIA. It's just extraordinary. I mean, look at some of the supply companies to the mining companies. Their market caps are dramatically bigger than the biggest mining companies. Yet, we can't do the stuff we want to do with regards to whether it's energy transition or whether it's the AI investment needs. We need raw materials for that.
Well, yeah. How much of a boost do you think you will get from AI to the metals sector? You think about building data centers. Surely that's a safer bet than where you say about the, uncertain outlook for EVs.
Yeah, so I think when you think about the growth prospects going forward from here, the drivers, a few years ago, everyone was talking about energy transition, how much more materials we need to replace fossil fuels and so on. Now people are talking about AI. But, when you look at the kind of the details beneath those, that's all about materials. You can't build an AI center without the copper and everything else that's going in. So what we're doing is we're adding layers of additional demand onto the market that need to be accommodated in supply growth. The supply growth only comes with investment. And as you've just said, it takes a long time to build new capacity. It takes an enormous amount of money. There are many hurdles to getting that stuff built. And if we're just adding layers of demand and we're not making the investment into supply, then there's going to be a gap that opens up and it's going to put pressure on prices.
When does the market recognize that? Is there a kind of moment where the market goes, we've mispriced this stuff?
Yeah, I think we've had flashes of recognition over the last few years. We've had these kind of brief points where things have really started to move and everyone's got excited. We've had M&A that's kind of been signaling this as well. But there isn't the kind of widespread consensual view. There's still complacency when it comes to supply. And I think that, it's because, you look at our daily lives, how often do you realize that you're consuming copper? You're consuming food and petrol and everything because you see it. You know what the price is. It affects your wallet. But, you don't know if the price of steel's gone up unless you're building a house or copper or whatever it might be. So there's
petrol, gasoline's easy to understand.
It's just visible. Absolutely, it's visible. You just don't see it. If you're the average consumer, you don't see it. So I can totally understand why there's this complacency, and therefore that complacency means I don't care about it when it comes to my investment portfolio.
Can I ask, Ben, you're sounding really quite bullish then, Evie, on these stocks. Why is it so we see, for example, Rio down today, and I know we won't focus necessarily on one particular deal, but even at a time when you say there's lots of good value around in the sector, when we see some M&A, there's nervousness perhaps that big names overpay. How nervous should we be about overpaying if things are such good value?
Well, the track record on M&A hasn't been great in this sector over several decades. And it also hasn't been great, and we saw some terrible examples in the early 2000s, and again some more terrible examples from kind of 2011 through to 2015. But I think since 2015, end of 15, beginning of 16, the capital discipline and the capital allocation frameworks that the companies have put in place have given us much more confidence that the money would be spent more wisely. And we've had now, whatever it is, the best part of a decade of you could say kind of austerity. There's been discipline. The companies have been paying down debt. They've been handing cash back to shareholders in dividends and in many cases buying back shares. You've seen an enormous reduction in the share count across many of these groups. And so when you put all of that together, it's been surprising to us that we haven't had the spectacular returns that you would get. But the returns have been very good since 2015, much better than the broader market. Now we're kind of starting to see this inkling of M&A activity, and I think that there is obviously caution around that because when you see M&A transactions normally announced, the acquirer's shares normally go down on the initial day, and in some cases they go down more than the price or the value they're paying for the company they're looking at. So it's not a surprise to us to see some kind of initial reaction. Also, when you have M&A, it needs to be explained, and I think with the examples you're talking about, there's been very little commentary from either side.
Evie, I know that you're a metals man, but I'm looking at WTI up more than 1% currently. We've had even equity traders dipping into the oil market to take advantage of the war risk. How do you observe that from where you're sat?
Well, it's a tough area to go into geopolitics when it comes to this, and obviously there's multiple tragic situations happening around the world. So it's no surprise to us to see when you have this heightened risk that premiums do go into commodities like oil. So I think that's a natural reaction that people will be looking at. But when you look at the physical situation in the oil market, it's actually pretty weak with regards to demand. The contraction in growth assumptions around Chinese consumption are very, very material. And so unless we see some kind of response from OPEC to be able to protect prices without the kind of geopolitical risk, you would expect prices to retreat back down again.
Can I just compare and contrast the lithium story and the oil story? We got very excited about EVs. Lithium absolutely surged, has faded. The expectation on EV transition is now much lower than it once was. Battery transition was lower than it once was. If we see, for instance, the European Union pushing out dates for the transition towards EVs, how does it change? Does it change the calculus around kind of how the energy transition is happening? Have we set ourselves too aggressive targets? Are those too aggressive targets now being downgraded? Have they been downgraded in terms of things like the lithium price? Is oil demand going to be with us for longer? How do you see that balancing act between kind of old world hydrocarbons, new world metals electrification?
Yeah, well, I think there's multiple fronts in the way you could answer that. So when you think about the move away from fossil fuels, it's not just in petrol. You know, it's across the entire energy space. And so when you think about the environment we're going into in regards to energy consumption, we're going into an area where we're going to have a higher level of energy consumption per unit of GDP, which is very different to the energy levels of consumption we've had in the past.
Right.
It's been pretty static. And so if we do start to see this digital growth coming through and driving higher molecule consumption, you've then got to think about the format of that molecule. How is it coming? What's it being generated? Where is it being stored? How is it being moved around? And if we're moving away from fossil fuels, then we have a higher materials intensity in that higher energy environment, which is very exciting. EVs specifically, we have seen downgrades with regards to production numbers and sales estimates, but actually the amount of the penetration rates are still high. We're seeing much higher, and you guys are the expert, your BNEF colleagues are just superb in this regard, but we're seeing much higher rates of market share than even the most bullish people were expecting. But what we've seen is that as the customers, they're saying, we want value. And the prices of cars that are now coming in to the European market specifically, are incredibly good value, hence the tariffs that are being put in place. So I think we're in this kind of price discovery process when it comes to things like EVs. What can the market afford? The perceptions on risk around the reselling value is a huge factor. We've seen obviously a collapse in electric vehicle prices in the second-hand market because of the uncertainty on the batteries. And so those factors need to come through, and we need to start to kind of get through this point where people start to build comfort. And I think once we've got that kind of level playing field, the EU is trying to put in place, then we will see probably a market that goes forward from there.
But we need a little more time.
I think we do.
Price discovery process.
This is new. New stuff takes time for people to get used to, and there's been a lot of uncertainty around this, and charging infrastructure is playing catch up with the number of vehicles on the road. So all of this needs to happen, and we're also seeing huge improvements in the technology as well. I think we're going to see a step change in battery performance.
It's good to see you. Thanks for stopping by.
Thank you very much for having me. Absolutely. Thank you.
Evie Hambro joining us from BlackRock.
Let us stick with the commodities theme and head back to the Middle East, which is a conversation we started having earlier on in the programme. As the Middle East marks 1 year since the October 7 attacks by Hamas, Israel is locked in a multi-front war. The IDF sending troops back to northern Gaza and keeping up an intense aerial bombardment on Lebanon. For more, let's speak to Jumana Basecha, our Horizons Middle East and Africa anchor, who joins us now, and casting her mind back over the past year, Jumana, and forward to what happens next. 1 year on then, is there any end in sight, Jumana?
Well, that is the question. And of course, we cast our minds back to the events of 1 year ago, a deeply traumatic event for Israel, and the single deadliest event to ever occur on to the Israeli nation. And since then, it has been a game changer for how Israel views its defense and how it views its place within the region. The goal ever since has been to ensure that an event like October 7 never happens again. And so the events, if you look back at what has happened just over the last 12 months, Israel has launched a massive military campaign against Hamas militants within the Gaza enclave, but it, of course, has come at a very high cost. The Palestinian Health Ministry state that 42,000 Palestinians have lost their lives, 90% of the population displaced, 60% of the city has been destroyed, and yet still about 100 hostages remain in captivity with no ceasefire in sight. And it's not just the one front that is being waged there. Another front has recently become a lot more intense over the last couple of weeks. Here I'm talking about the events in Lebanon, with Israel launching a ground incursion with the stated aim of dismantling Hezbollah military infrastructure. And that has only intensified over the last couple of days as well, with ongoing airstrikes aimed at some of those key Hezbollah strongholds around central Beirut and around the eastern Bekaa region close to the border as well. And that is, of course, one other front. And then the third front, which potentially could be the riskiest of all, is the second episode of Iran firing direct ballistic missiles at Israel a week ago. And the expectation is that Israel will have to respond in the coming days. And so if you look at the events and everything that has unfolded over the last 12 months, there hasn't been a lot of de-escalation. If anything, it has been escalatory in nature. And still, we talk about the potential for a ceasefire, but there appears to be a lot of daylight between all of these sides as to whether or not those ceasefire can be fully implemented and respected by all parties involved.
Well, Jemana, as we question what's left of America's influence over Israel in Joe Biden's final months as president, as we await a potential Iran reprisal, what are the latest developments in Lebanon?
Well, the Lebanon is probably the most intense front, and I listed that it's a multi-front war, multi-front conflict going on in the region right now. And in Lebanon, you have airstrikes that are continuing in central Beirut, South Beirut, the eastern Bekaa. Even one of the crossings, the major crossings from Lebanon to Syria, was hit with an airstrike over the weekend as well. The death toll is rising there too. The number the Lebanese Health Ministry have put out is 2,000 people have lost their lives, around 400 of them women and children, about 100 medics also targeted as well. But then there's also fighting going on the border too. And it's unclear at this point exactly what is happening. It's quite difficult to get information as to what is happening with those border clashes that are still very close to the southern blue line, as they call it, the border that separates Lebanon from Israel. But per Israeli media, about 10 Israeli soldiers have lost their lives. The IDF have also said that they've been successful at dismantling around 2,000 of Hezbollah's military infrastructure sites. And per IDF as well, so far, given the intensification of the campaign in Lebanon, they say that they have dismantled 60 to 70% of Hezbollah's total arsenal. But the question from here onwards is, at what point does Israel see themselves as having completed that new war objective, which has a stated aim of restoring security back to the northern border again. And on the other side, on the Lebanese side, again, no end to the airstrikes in sight, coming at a time when there is a worsening humanitarian situation. We've spoken about 1.2 million people being displaced, in addition to the political stalemate that exists in the country with no actual president. So again, all of these things are swirling, and for now, it just seems like further escalation.
Okay, Bloomberg Horizon's Middle East and Africa anchor Jemana Basachi in Dubai. We thank you. As traders continue to mine that geopolitical situation, WTI crude higher more than 1% now. Brent higher 0.75% at $78.65 a barrel. But coming up on the programme, ramping up the media appearances with less than a month to go. Kamala Harris and Donald Trump stepping up their campaigns. I'll bring you all the details next. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977, when by then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Green World Cup. This is a three
As the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back to the opening trade. 53 minutes into today's session, Monday's session here in Europe. And we see losses across European equity markets, in particular on the German DAX, where we're down 3 0.4%. Now, it is now less than 1 month until the US presidential election. Vice President Kamala Harris is ramping up her media campaign with a blitz of TV and podcast appearances lined up over the coming week. This comes after Republican rival Donald Trump and former president rallied supporters in Pennsylvania over the weekend, with Elon Musk joining him for the event. Let's bring in Bloomberg's Bill Ferries, who's monitoring all of the action ahead of the election. Bill, what does this flurry of media appearances mean then for Harris?
Well, if you remember that first month after Harris became the Democratic candidate, there was a lot of criticism that she wasn't appearing before the press, she wasn't doing unscripted remarks, and she wasn't doing kind of press conferences. She's starting to chip away at that reputation at this point. Still largely doing more niche audiences, going for niche audiences, podcasts. She's done the Call Her Daddy podcast, talking about student loan repayments, so going after a younger, more female audience there. She's doing The View, which is arguably an older female audience. She's going to do the Stephen Colbert Show, things like that. Not a lot of really kind of hard-hitting interviews, but a way to get out there, field some questions, and probably really target those audiences she's trying to make sure turn out next month.
And as Anna mentioned, you had Trump returning to the site of the first assassination attempt. I wonder, isn't that just going to shore up the same sort of support that he already has on board? Should he not be following the Kamala Harris strategy and taking a leaf out of Taylor Swift's book and going for the Gen Z vote?
Well, I think, he's campaigning. That event was in Pennsylvania. That's probably the most important of the battleground states. So I think both sides over the next 4 weeks are going to spend a lot of time in that state. I think Trump is going to have a similar media strategy. He's probably going to be doing more Fox News and other like podcasts, friendlier interviews. Both sides trying to make sure their key constituencies turn out in November.
Bill, thanks for the update. We're going to watch with interest. Obviously, we're less than 1 month to go until that election, that critical election for not only America, but the rest of the world. Bloomberg senior editor Bill Ferris joining us. Let's talk about what we've got coming up for the rest of the week. Look, China's back tomorrow, and apparently we've got a really big briefing that is going to further augment some of the efforts that we made thus far to signal that Beijing is serious about its stimulus. That could be a key event. But what is going to be the big volatility event of the week, I think remains an open question. You've got China, you've got Fed minutes, you've got a lot of US data in the form of CPI, and then we get to the earnings picture as well at the back end of the week. Which of these kind of events is going to dominate, or will it be the geopolitics and what comes out of Israel and Iran?
Depending on what Israel does, perhaps.
Yeah.
And the French budget as well, as he's been reminding us of the need to focus on that. But yes, tomorrow I am taken by the detail. What detail will we get from the China National Development and Reform Commission? They are holding a press conference tomorrow.
What a great name.
We will certainly be there for all the detail on that one. And then as we get towards the end of the week, of course, we get bank earnings. Back to that story. As Maria Weitmaner was telling us, it's high time we focus in on that.
Yeah, we also get GDP out of the UK on Friday, expected to point to the health of the economy. And as I say, now that Keir Starmer's got a new chief of staff, is he going to start pointing to the health of the UK economy after all the doom and gloom of the summer? It's a way to frame
Different
that
message.
budget at
Different
the end
message,
of the month.
maybe.
From the Treasury, from number 10 Downing Street, maybe two different messages coming out. Lisa is over here tomorrow. She's going to be talking to Jamie Dimon as well. Let's not forget that. So that's it. The opening trade. We've set you up for the week. Francina's next. The Pulse is coming up. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
And then Valerie. A blow-up payrolls report reignites bet on a no-landing scenario. Bond traders regroup and reassess the Fed's rate path. Goldman says surging Chinese stocks may actually advance another 20% as it upgrades its call to overweight ahead of mainland markets reopening tomorrow. And Israel intensifies airstrikes and ground assaults on Gaza and Lebanon 1 year on from the deadly October 7th attacks by Hamas. So let's take a look at the European markets map. Again, there's quite a lot going on this week, a little bit of M&A as well that we'll get to in a second. Overall, it does seem that markets are a little bit more on a positive note. I guess some of the Middle East tensions that we worried about it tempered some of the optimism, but also isn't putting that much anxiousness out there. Now, the one thing we need to watch out for is, of course, any kind of new call on the U.S. economy. Again, the Jobs Friday report means that there's a lot more hope that not only is the economy stronger than expected, but it means that we'll see less rate hikes overall. This is a picture across the board. We look at treasuries. We did see a repricing on treasuries. We'll speak about that with Rachel Evans very, very shortly. But the Friday report really pointed to this unexpected strong employment situation, which now leaves a soft landing on the card. So for the conversations that matter and the insights you need, let's get started.
makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, joining us, Charlotte Ryland, Head of Investments at CCLA Investment Management, and Rachel Evans, Bloomberg's Managing Editor of FX and Rates for EMEA and the U.S., and also Will Kennedy, Bloomberg's Senior Executive Editor for Energy and Commodities. There's a lot going on today in the market, so we actually got the big guns out from Bloomberg. Charlotte, there seems to be a lot more positive news on China, a couple of the calls from Goldman, but then the number of people that are very skeptical about what actually happens with this big stimulus is also increasing. So where do you stand?
I think, to be honest, we're still staying reasonably sceptical. I mean, I think there's some very big challenges still out there for China. They've got to move their economy towards consumption. They've got very, very high saving rates. How do you get people to actually spend if you haven't got a social safety net in the same way as we have here? And the biggest asset has been property, and the property market is still in a lot of difficulties. So, you know, it's great that the government's coming out there and trying to stimulate things, but I think there's probably quite a lot they need to do.
So, Charlotte, overall, this is basically question marks on not only on whether the stimulus works, but it's actually whether they're stimulating the right part of the economy that they want to see in the future.
Exactly, yeah. So I think, you know, just lowering lending rates and things is not going to be enough if you haven't got that confidence in the actual property values. And you've still got all the geopolitical tensions out there. That's still that shift away from, you know, importing stuff from China that we've seen over the last, you know, couple of decades. But actually, there definitely is a big shift away from that within the West and that reshoring trend.
And Rachel, we're a little bit in a wait-and-see situation because it's actually been closed for a week, and so it's tomorrow that we have the first market reaction to everything that we've lived through.
Yeah, no, absolutely. And I think, like, I mean, to Charlotte's point, I think people have been so burned over the years that really kind of buying in at this point, you know, you've got to really believe in that narrative. You know, we've been on basically a downward trend since early 2021. And yes, we've seen kind of like a really big jump since some of these stimulus measures were unveiled, about 27%, but we're still quite a long ways off those 2021 peaks. So the question when people, when the market reopens tomorrow and people get back to their desks is really, do people buy into the narrative, particularly when you look at the kind of the wider backdrop that you've got globally?
Do treasuries, does the dollar need a stronger China actually to be able to continue on their course, or have we, for the most part, decoupled, Charlotte?
Oh gosh, I mean, in terms of the dollar, I mean, it's going to, I think, still be about where do you think the direction is for Fed interest rates, and having been extremely, expecting a lot of cuts. Clearly, the market is now saying, well, actually, this is an economy which is doing pretty well. It's not moving into a recession. At least some of the signs seem to be suggesting that, and therefore probably not quite as much cuts as people have been hoping for.
So, Rachel, who needs, again, the strength of the China economy is, I guess, good for the whole world. But does the Fed need to see a bit of reassurance? We'll get onto the jobs number, on the U.S. in a second. But what's the interplay between the Fed and China?
Yeah, I mean, I think for China influence, it's very much important for Asia. And I think a lot of Asian markets, we're looking to see kind of like a more bullish China story. But I think where China becomes really interesting with the US at the moment is on the political side. You've got so much rhetoric at the moment coming out from the Trump campaign and even the Harris campaign as well around China and competitiveness. But that means that the dollar-yuan exchange rate is going to be something that's very, very much under scrutiny. And you've really kind of seen sort of like when we were having kind of very strong dollar through kind of like the beginning of August, you were seeing kind of that really sort of hurting the yuan exchange rate. So you were seeing kind of like the competitiveness of China really very high, and that was kind of like became very much a political conversation. But as you've seen kind of the dollar sort of ease off as expectations for kind of easing of some sort kind of growth, that's become less of a conversation. But I think it still becomes this big political narrative about China versus the US that people will kind of try and jump on that bandwagon for.
Okay, let's also bring in oil. Oil erasing this morning's losses as traders continue to weigh Israel's potential retaliation against Iran. So let's also bring in Will Kennedy. Well, I mean, oil, again, is a tricky one because it's been mildly unchanged for the last, for the good part of 6 to 7 months. And then last week there was a lot going on because there was fear of retaliation for Iran, but also hitting oil facilities from Israel.
I think last week was the week that the market finally became interested in geopolitical risk. Clearly, the idea that they could hit directly Iran's oil industry changes the equation for many oil traders. But I also think it's interesting that also the change in sentiment about the Chinese economy is obviously having an impact here on oil. If we go back a few weeks or maybe a month, the market was positioned in an incredibly bearish way, but that's really, really changed. We got a piece out this morning saying that the options positioning is at the most bullish now that it's been in 2 months, which is a really quick reversal. And I think, yes, the situation in the Middle East is the main driver of that, but also the increased optimism about what comes next in China is also playing a part.
I mean, are we really talking about some of the oil facilities actually, possibly being struck? And again, that hasn't really played out. I mean, people were concerned, probably option traders, but it hasn't. I mean, if that were to happen, then I guess all bets are off on the price of oil.
Yeah, and I think the real danger from there is you get more escalation and a real war in the Persian Gulf, and that draws in other oil-producing countries, and that has always been the most difficult scenario for oil traders. Will Israel do it? We don't know. It's clear there were some quite confused comments from the president in Washington last week, but it's clear that the US would rather they didn't do that. But we've seen repeatedly in recent weeks that Israel isn't always following the path that the US would most like. So I think for most traders, they have to see it as a possibility.
Well, in the mining space, also Rio Tinto has made a takeover bid, I think worth some like 3.3 or 3.5 billion for Arcadium Lithium. So what details do we know?
Well, Rio, I think, has liked lithium. A lot of its competitors have emphasized more growing in copper. I mean, Rio is important in the copper space as well, but it clearly has said that it wanted to make a move into lithium, and it sees the opportunities there because of the growth of batteries. Lithium prices have plunged in the last 18 months as supply has run ahead of demand, and the EVs haven't lived up to some of the hype that people expected. So there is probably an opportunistic flavor to this approach. We do not know the financial details yet. The 3.3 is the current valuation. I think it's fallen by about half, so it could be Rio Tinto feels the right time to make a move into this space.
Charlotte, I don't know what to make of those two stories. So first of all, there's a bit of M&A, and we see it a bit in the banking space, and so whether that points to green shoots. But then there's a big question mark on the price of oil that so far you could say has almost been a stimulus measures because it's been lower by historic standards.
Yeah, I mean, clearly the oil price, as you say, has been moving about because of the geopolitics. I mean, all year it's been, and actually for the last couple of years, since the whole Ukraine spike in oil, it really hasn't been going anywhere. And because the two big suppliers are Saudi, they still have a lot of oil, and the US is still producing an awful lot of oil. So it's still quite but short of a sort of massive, growth boom. I don't really see that there's an awful lot of strength behind that oil price, other than sort of the geopolitics, which is clearly what's supposed to push it up short term.
On M&A, does it make a difference? I mean, does it mean anything for the world economy, or is it seems opportunistic because there are just deals out there that could be valued?
When we've been seeing this, whether it be in the UK economy, there's been various things that have been taken over in terms of the commodity sector. I mean, clearly, if you're Rios and you're very heavily focused on things like iron ore, which has been great, but into the future, if you're lithium, you'd have thought with the battery technology would be an interesting area to be in. Clearly, at the moment, it's quite weak, but in the long term, might be more interesting.
I mean, again, but to your space, Rachel, when you look at FX and petrodollars, does it change? It's incredible what we've been living through for the last year, and actually, the price of oil not changing that much.
Yeah, we've certainly seen commodity currencies like really sort of getting a bit of a boost from this, sort of things like the Norwegian krone, the Australian dollar. They really have kind of like benefited from this to the point whereby I think for folk kind of thinking about what might be a good carry trade going forward, they're thinking about some of those higher yielders being continued to be boosted by sort of commodities being relatively strong. So I think in that respect, it has kind of had sort of a pass through. But yeah, I mean, I think from a dollar perspective, I mean, Charlotte made the point earlier, that's going to be all about the Fed. So yeah, we're going to be looking for more kind of changes to how people are viewing kind of the Federal Reserve's path for interest rates to sort of see really what that means for the dollar.
And guess what? We have a deep dive on the Fed next. So Will, thank you so much. Will Kennedy, their head of commodities for Bloomberg, and Charlotte Rowland from CCLA, Bloomberg's Rachel Evans, both stay with us. We talk Fed, and we, of course, talk about the jobs reports. That's coming up next, and this is Bloomberg.
On there. So there's really been three. Number one, prosperity, as you've said. Number two, improvements in healthcare. So in 1900, half the children died on the planet before their fifth. and the third was the education of women. So we've had some pretty interesting questions put up here, but let's try this one. What keeps you up at night and what gives you joy?
Well, I think kids give me joy. So I probably get the most joy from my kids. You know, I'm not saying that that's the reason to have kids, because we should have them anyway, but I certainly, kids are the greatest source of joy in my life. In terms of what keeps me up at night, I guess it's anything that's like, I think, a civilizational risk. You know, if we're, you know, birth rates continuing to plummet, I do think about the birth rates plummeting as being a civilizational risk. I think anything that undermines the foundations of democracy in America or elsewhere as a risk. I think anything that's leading us away from a merit-based system is a risk. I actually spend I listen to like podcasts about the fall of civilizations to go to sleep. So perhaps that might be part of the problem here. There's literally a podcast called Fall of Civilizations, which I've listened to a few times. I'd also recommend Hardcore History if you haven't listened to that. It's a great podcast. I listen to history podcasts basically to go to sleep. So that's probably why I'm ruminating on these things as I go to sleep.
It was a superb report. You really couldn't ask realistically for a better report. I still think, as a central bank, you don't want to react too much to 1 month's report.
Well, let's bring Bloomberg's Valerie Teitel. Valerie, what did we learn on Friday?
Well, Goolsbee said you shouldn't react too much to one report, but the market sure did react to that one report, Francine. On the week, two-year yields rose 36 basis points, which is one of the biggest weekly moves since 2008. All of those hopes for a 50 basis point cut from the Fed in the November meeting all but erased. And the very surprising thing this morning, Francine, is that the bond market is continuing that weakness into today's session. Let's flip the board and check how the Treasury curve is acting. We are seeing this weakness in the front end continue up another 5 basis points. And note, Francine, we are very close to reinverting the curve. The 2 and the 10-year yield are very close to hitting that 4% benchmark. But it was a very bruising session for the bond market, but the equity market seemed to take it in stride. We've actually seen a few upgrades to the U.S. stock market from the streets, the like of Citi, the likes of Goldman, the likes of Morgan Stanley, all turning a bit more bullish on U.S. stocks. We had Morgan Stanley upgrading cyclicals, Goldman upgrading their year-end target. And in that note, they actually said that 6,000 could be too low for a year-end target. Citi also notes that this could help the broadening of the rally, this broadening of the stock market rally. The balance of risk could help ignite a rally further.
All right, Valerie, thanks so much. Valerie Teitel there. Of course, we look at inflation and we look at a number of other data points. We're back with Charlotte Riley from CCLA and Bloomberg's Rachel Evans as well. Rachel, when you look at, I mean, there was a big market move actually on the back of Friday, and I guess the next data point is going to be inflation.
Yeah, I mean, it's really hard to sort of overstate just how big Friday was for the bond market. I mean, we saw sort of front-end yields moving sort of the most they'd moved since April, which coincidentally was when we had a massive inflation report. And it's been very interesting in the last few months that we've really kind of shifted from it being all about inflation and whether the Fed needs to hike some more to really kind of break inflation's back, and kind of to what degree the jobs market is deteriorating and therefore necessitating cuts. And I think we're now getting to a point where the market has kind of, so far, in the last couple of weeks, been really ignoring inflation, and they're going to have to start looking back at that. I think Mohamed El-Erian said on Friday, you know, something that really stuck with me, that inflation is not dead and that the Fed has a dual mandate and it needs to kind of be looking at that dual mandate again. So a lot of the commentary recently has been around the jobs market and jobs market deterioration. I think we're going to see a lot more commentary now around inflation, and a lot of traders are going to be having to think about whether that sort of really kind of gets rid of the idea of a hard landing, gets rid of the idea of a soft landing, and puts a no landing potentially in play.
Charlotte, I mean, as Rachel was saying, there's a pretty substantive sell-off actually in treasuries. Was that overdone, or is it trying to calibrate basically what the Fed does?
Yeah, I mean, I think, the market is still pricing in, 7 rate cuts, I think, and so it's still assuming that we get down to a pretty low level, which if you think about, what should a long-term neutral interest rate be, it's quite possibly rather higher than what we're talking about, and particularly if you've got an economy which isn't showing much signs of being in difficulty despite that very, very high move up in interest rates that we saw over the last few years. So, I mean, if you've got a reasonably strong economy and you've got, inflation, is lower but, still there, having incredibly low interest rates seems to be a little overdone. So you can see why that's happened.
But, Rachel, what's the main worry with inflation? We hear that from actually quite a lot of central banks and saying, look, it's okay, it's better, but actually the fight is not won yet. Are they worried about a spike up in oil prices, some geopolitics, or, an event? Or just structurally, could it come back towards the end of the year as we also use more oil and gas?
I think it's an open question. I think, that there had been until very recently the sense that it was done. And we'd seen sort of some stickiness in inflation, particularly in the UK, for example, on the services side, which a lot of people have kind of attributed to sort of more structural reasons. But from a US perspective, there was kind of a sense that things had sort of normalised. But I think, what you're seeing in the jobs market is that market is still going gangbusters. And there's going to be a lot of question marks about why that is. Is that kind of a bigger structural change? And how much does it have to do with kind of a broader inflationary picture? We've got CPI numbers out on Wednesday. That's due to show kind of a slight moderation again in sort of year-on-year CPI. I think we're heading back down to about 2.3%, staying about 3.2%, I think it is, for core. But so the question is going to be, do we start to see that inching higher? Are there kind of some interesting things to dig into within the kind of details of that report? And I think, as you mentioned, the geopolitical risk, with oil, potentially some supply chain drama that could kind of unfold from that as well, that does have an inflationary impulse, as does potentially the US election. If Harris and Trump come through with big spending plans, that could be inflationary, and that really has an impact.
And again, I know central banks will push back against this, but there is a gravitational pull from the Fed. Mm-hmm. Does it change your expectations for ECB, Bank of England, and even Bank of Japan?
Well, certainly Europe is in a weaker position economically, so you'd have thought there is always more scope there for them to be a bit more aggressive in terms of rates. I mean, Japan is moving glacially, as we know, in terms of moving to a slightly more normal interest rate policy. So, we will see how fast they move.
Yeah, and we're also trying to understand, right, what the new leader wants to achieve, and then we have elections in Japan October 27th. Yeah. What does it mean do you have assets, like asset allocation in Japan? Do you still like Japan?
I mean, we have a very, very small, exposure to Japan, and we pick stock on a bottom-up basis, so we're not doing it on a top-down basis.
I mean, they also gave us a little bit of fright with some of the unwinding of the carry trade in the last couple of months.
They certainly did, and I think that shows you, we can't sort of take out any of these other economies from thinking about the broader market, right? We're all interconnected. I think, when we look at the yen and how much that kind of backed up, how much it weakened following Ishiba's comments last week about the BOJ needing to take its time, shows you how sensitive the market is to kind of different things. So that could be a prompt for people to re-establish kind of short bets on the yen and to re-establish that carry trade that went so wrong in early August. But it also kind of brings into play again the risk of intervention. We're around the 148, 150 kind of level in the yen at the moment. 160 is where we saw intervention. So we're not a huge distance away. And if we do start to see kind of weakening in the yen continue, if, the Fed sort of indicates that it's not going to cut rates in a hurry, and if the Bank of Japan does indeed suggest that it's going to sort of get its whole pat for the short term, you could see the yen start to weaken more significantly, and that could bring intervention back into play.
A lot going on. Thank you so much for joining us, Charlotte Ryland from CCLA and Bloomberg's Rachel Evans. Now, coming up, Commerzbank's chief executive pours cold water on any potential merger with Italy's Unicredit, warning that a deal could cause more headaches than it's worth. So we'll have the latest on that next, and this is Bloomberg.
bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back, everyone. Now, in an interview with Handelsblatt, the Commerzbank chief executive, Bettina Orlop, says she sees risks in a takeover by Italy's Unicredit. Well, Orlop added any potential deal could lead to a loss of customers and create disadvantages for German companies. Let's get the details from Bloomberg's Oliver Crook. So, Ollie, good morning. Is Commerzbank's CEO strategy changing?
Yeah, Francine. So really at the beginning when she took over a couple of weeks ago, it was all about the positive vision that she had for the bank of the future. And really over this weekend, this first interview she's given since taking over, it's really all about the risks that would be associated with a Unicredit takeover of Commerzbank. And one of the principal risks that she highlighted was that it could hit very significantly Commerzbank's credit rating, which would obviously have a lot of an impact on everything to do with all of its interest rates and servicing its own debt, which obviously is a very sensitive topic in Germany, as we know. She also highlighted the execution risk, the difficulty that maybe there is some deal logic on paper, but the execution is a lot harder to actually get going. But also in terms of servicing the German economy, she says that when your bank is headquartered somewhere else, it is not really sort of sensitive to all of the needs within the German economy. And these are some of the points that she was making. She's saying that really the only path forward is the 3-year plan that she has laid out, which is all about boosting profitability, cutting costs, but also obviously remaining an independent institution. When asked at what price would it make sense for Commerzbank to agree to be bought by Unicredit, she wouldn't rise to that question. However, Francine, she did say that she was confident she could get the shares to about 25 to 30 euros a share. We're about $16.50 right now with the Unicredit sort of premium already priced in. So I think 25 to 30 is quite an ambitious target and is not a price we've seen on Unicredit since about 2011.
All right, Oliver, thank you so much. Oliver Crook there in Berlin. Now, coming up, 1 year on from the October 7th attacks on Israel by Hamas. We'll discuss the latest with the director of Chatham House's Middle East and North Africa program. That's next, and this is Bloomberg.
dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. A blowout payrolls report reignites bets on a no-landing scenario. Bond traders regroup and reassess the Fed's rate path. Goldman says surging Chinese stocks may advance another 20% as it upgrades its call to overweight ahead of mainland markets reopening tomorrow. And Israel intensifies airstrikes and ground assaults on Gaza and Lebanon 1 year on from the deadly October 7th attacks by Hamas. So 1 year after these deadly attacks, Israel remains locked in a multi-front war. Over the weekend, the IDF sent troops back to northern Gaza and continued an intense aerial bombardment on Lebanon. Now, for more on all this, Bloomberg's Jumana Bersace joins us. Jumana, 1 year on, is there any end in sight?
Oh, that is the big question. And I think it really just encapsulates how much of a game changer October 7 was for Israel, with the killing of 1,200 people, 240 were taken hostage at the time, 100 still in captivity. And the moment served as a game changer for how Israel views its defense and security within the region. And of course, shortly afterwards, launched a very intense military campaign to clamp out Hamas militants in the Gaza enclave. But of course, it had come at a very heavy cost, with the death toll in Palestinian territories rising to 42,000, over 90% of the population displaced, 60% of the city destroyed, and still no ceasefire in sight. I mentioned that 100 hostages are still held in captivity. And just a short while ago, we were hearing of sirens going off in Tel Aviv, Hamas militants claiming that they have fired rockets into the city. So just still one element of the conflict still very much at bay. But then in the last couple of weeks, what we have seen is an intensification across the other fronts as well, specifically in Lebanon. Right now, Israel is engaged in a ground incursion in the country. Fighting is taking place at the border. Heavy airstrikes across central Beirut, southern Beirut, and the eastern Bekaa Valley. You also talk about the rising death toll in Lebanon. More than 2,000 people have been killed per the health ministry, 1.2 million people displaced, and of course, political stalemate over there, given that there is no acting president for the time being in the country. And the question is, at this point, at what point does this conflict end? It was only a couple of weeks ago that Israel introduced a new war objective with the sole aim of restoring security back to their northern border. They say that they have succeeded at dismantling 60 to 70% of Hezbollah's military infrastructure. But the question is, at what point would they have deemed to have eradicated or diminished Hezbollah's capability sufficiently so that that northern security that they speak of is restored? And then finally, we haven't even spoken about Iran yet, But of course, over the course of this year, Iran has launched 2 direct attacks at Israel, the second of which happened only 5 days ago, and there is expectation that a reprisal is coming soon. So if you think about how everything has evolved over the last 12 months, if anything, the situation in the region has intensified and escalated with no end in sight or no ceasefire in sight for the near future.
All right, Jumana, thanks so much. Jumana Barsecha there in Dubai. Now joining us to talk about this a little bit further, Sanam Vakil, Director of the Middle East and North Africa Program at Chatham House. Sanam, thank you so much for joining us. I mean, it's pretty incredible to see this Mideast conflict really widen and to escalate, especially in the last couple of months. Does it show the limit of the U.S. leverage in the region and with Israel?
Well, good morning, and thank you for having me. I think this is a really grim moment for the Middle East. There has been so much tragedy and life lost across the region. I think it's certainly time for us to reflect on how much more this war can spread, and we're certainly waiting and have been waiting for a few days now for Israel to respond to Iran's very aggressive attack on October 1st, targeting Israel directly. You asked about the role of the U.S. The U.S. has played an important role over the past year. On the one hand, it has continued to support Israel's security, and it has done so diplomatically, it has done so militarily. The U.S. has mobilized forces, aircraft carriers into the Middle East, and over the past year on multiple occasions has prevented the war from spreading. It has also worked behind the scenes with its partners in the region to try to bring about a ceasefire to the war in Gaza, but hasn't been able to impress upon Netanyahu or Hamas's leader Yahya Sinwar that the time for a ceasefire is now. So the role of the U.S. is certainly checkered. And I think what is certainly a problem is that we are in the U.S. election cycle, and both Donald Trump and Kamala Harris are worried that the impact of the war in the Middle East will play out on their campaigns back home.
Sanam, the Israel-Iran conflict is, of course, now reshaping the Middle East. What do you think happens next? And actually, what role is Hezbollah playing in this?
Well, I wouldn't say we're reshaping the Middle East yet. I think the Israeli narrative is that it wants to reshape the Middle East. And since last October, what Israel has been trying to do is to degrade the capabilities of the Iran-backed groups in Hamas, in Hezbollah, and of course, eventually maybe Iran itself. But we are not in a reshaped Middle East. We are in the fog of war. And this is why it's hard to see the forest from the trees. Problematic is that Hamas is not defeated, and Israel is repeating its same military tactics in Lebanon, spreading a lot of the conflict. You've heard from your reporter, 2,000 people have died. We are in a dangerous moment, certainly, depending on how Israel strikes Iran. This definitely could lead to a broader regional conflict. But I don't know if that's currently where we are. We've been waiting for days, and I think the U.S. has been working behind the scenes to try and moderate the targets that Israel will attack, probably focusing on military targets rather than nuclear or oil export infrastructure that could, of course, be provocative for Tehran.
Sanam, when you look at a lot of the Arab powers, of course, in the Middle East, I mean, I guess they have a dilemma. A lot of them seem to be happy with Iran's influence in the region being eroded. But what happens to how they weigh in going forward?
Yes, I think a dilemma is the right way to put it. Iran is certainly a regional destabilizer, and Arab states have individually and collectively long been calling for greater attention and restraint to be imposed on Iran. The reality is, though, that they all live in the same neighborhood, and most Arab states are aware that military confrontation could very well spill over and impact their geographies. It's certainly impacting their economies. And ultimately, what is certainly needed, I think, going forward is negotiations and diplomacy with the Islamic Republic of Iran, but also clear red lines and deterrence imposed on the Islamic Republic of Iran. The way Iran supports Hezbollah, Hamas, groups across the Middle East that are deeply destabilizing needs to be changed. Those links need to be severed. And Iran needs to be incentivized simultaneously, if it can be, in order to focus on its economy and to focus on the development of its own domestic priorities rather than exporting instability across the Middle East.
Sanam, I mean, can it be influenced to focus on the economy and domestic issues? And are there leaders that actually Iran listens to?
Well, Iran has gone through a snap or surprise election after the death of its former president. And the new president, while not a Democrat per se, has recently been in New York and tried to lobby Europe and Arab leaders for diplomatic engagement. This is an opening. It's not going to be a panacea, but it's an opening to try and address some of the very critical issues on the table. Iran's nuclear program is advanced, and there's not adequate oversight on this program. Additionally, Iran has sent ballistic missiles to Russia. And, thirdly, as we've been discussing, there is the support for these groups across the region. So is there a combination type of an agreement that can be arrived at that isn't going to change the Middle East, but can incentivize a change in behavior while constraining Iranian action? That's where the diplomacy and that's where the compromise at a negotiating table needs to get underway, because the military engagement and the military focus on its own isn't going to change the Middle East, or isn't going to change the regional order, or isn't going to bring regional stability the way it is being argued by Netanyahu and other leaders.
Sanam, there's been so much loss of life. Are we any closer in the foreseeable future for a ceasefire? And what do we also know about the hostages?
I think I would like to tell you, and I would like to tell your listeners, that we are closer to a ceasefire, but there hasn't been any public discussion of a ceasefire. Talks are probably taking place behind the scenes, but this is a very grim and devastating anniversary for Israelis. The Israeli leadership is trying to find a way to address its security crisis, which is a domestic security crisis and a foreign security crisis. The reality is that Israeli leaders, however, haven't put forward a plan to address the issue of Palestinian statehood and self-determination. The current plans that are on the table are military plans. Those are, of course, consequential and harming ordinary people across the region, Palestinians above all, but now the Lebanese. And it is important to reaffirm 1 year on from the tragedy of October 7th that 100 Israeli hostages are still in Gaza, and they have not been released. And I think the focus needs to return to that ceasefire and to the hard diplomatic work that is needed. And there is an international community, many Western countries that are interested and willing to support those processes.
Sanam, thank you so much for, of course, all of your insights. Sanam Vakil there from Chatham House. Coming up with less than a month to go, Kamala Harris and Donald Trump step up their campaigns. We'll have all of the details next, and this is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Vice President Kamala Harris is ramping up her campaign with a media blitz of television and podcast appearances lined up over the coming week. Now, this comes after Republican rival Donald Trump rallied supporters in Pennsylvania over the weekend, with Elon Musk joining him for the event. Well, let's bring in Roz Matheson, REMEA News Director. Roz, thank you so much for joining us. I mean, there's quite a lot of bromance, actually, between Elon Musk and Donald Trump. Do we know if he's going to serve in the administration if Trump gets elected?
Well, that's always been the key question. He's indicated he's open to a particular role. We know that Elon Musk, for example, detests red tape, the business of government getting in the way of business being business. So perhaps he'd like a role in kind of paving the way to cut red tape. But certainly at the moment, what he is a really fundamental cheerleader for Donald Trump. We saw that rally in Pennsylvania. That's the key swing state, back there after, of course, that assassination attempt, a big rally, Elon Musk kind of leaping all over the stage in exuberance, rallying his online army or whatever he calls it. That's actually potentially quite significant because that state and its votes are going to be significant in the overall result. And so certainly his role in the run-up to the election has been significant. Whether he wants a job after, that's up to him.
So, Roz, we're exactly almost 4 weeks away from the election, November 5th. How are both camps trying to organize themselves? I guess it's hitting the swing states with key messages.
So it's hitting the swing states. It's also fanning out in a broad way. That combination, you need grassroots in those key states. You need to basically woo over individual voters even at this point. But also, Kamala Harris has been criticized by the Republicans. They claim that she's not done a lot of interviews, particularly in the early days. She wasn't putting herself out there. So what she's doing now is fanning out on podcasts, pretty sympathetic podcasts that play to her strengths around her views around abortion, for example, but also some interviews getting out, on nationally on television, podcasts that reach certain audience that are her key demographics, again, female voters, for example. So playing to both those angles, Donald Trump very much in the rally mode on the ground, because again, it will come down to that handful of states.
Yeah, and I think if the latest polls I looked at are correct, they're still neck and neck in those swing states.
Well, that's right. It's way too close to call. I mean, even one might be up in one poll a couple of points, one might be down, but it's all within the margin of error. And the national polls, they don't really give you that sense of those individual states. The polls that Bloomberg's been doing, again, show that it is very close and it's swinging around. We don't know if some voters are undecided. We don't know if they don't want to admit who they're voting for. Sometimes we don't like to talk about who they're going to vote for. They keep it very close until election day. So, really, this is a high level of uncertainty going into this vote, perhaps the highest we've seen in a number of elections.
Roz, we're just looking at the U.S. 10-year yield rising above 4% for the first time since August 8th. I mean, this is basically on the back of this blowout jobs report on Friday. I mean, on the economy, does it help the incumbents or the Democrats?
Well, certainly it's good news for Kamala Harris to be able to talk about these numbers where, the economy, but also jobs, inflation a bit trickier, but on the back of that, voters are saying she needs to set out specifically what her plans are for the economy if she does become president. And the backdrop of all of this is the question of oil. We've seen oil start to tick higher again. If you get, for example, a broader conflict in the Middle East, if, for example, you get, a hit on Iran's oil installations, you're talking about a sustained rise in the oil price right at the very wrong moment, for Kamala Harris, because, of course, Americans, American voters, they love their cars, they love driving their vehicles and their trucks, and they're going to watch very closely to see what the oil price is.
So interesting, Roz. Thank you so much. Roz Matheson there, Bloomberg's MEA News Director. Now, coming up, how financial influencers are fueling a retail boom in risky ETFs, promising big returns. We'll bring you our big take story next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Was going to keep rating World Cup. This is a 3
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
In a moment, we'll talk crypto and the Premier League with Bloomberg's Emily Nicole. It's a good story. But first, today's big take looks at the growing number of amateur investors plunging into the complex world of derivatives-powered ETFs. Now, the products dangle huge payments, riding big-name stocks, but industry professionals and regulators are urging caution. Well, here to talk or to walk us through all of this is Bloomberg's Charlie Wells. Charlie, thank you so much for joining us. Emily, I'm looking forward to the crypto story. But basically, the problem is that there are a lot of influencers that are basically saying buy ETFs on TikTok and you'll get great returns.
I mean, these products sound great on these social media channels, and it's effectively people who will literally say, I used to work a 9-to-5 job and now I'm getting all of these dividends. And, you know, the issue here is that the cash is real, right? So there's a lot of these products, what they basically do is they will sell options and then they get cash and then investors get that back through these ETFs. But of course, you know, these are very complicated products, but they're drawing a lot of attention mentioned, $50 billion so far this year, and 164 derivatives-backed ETF products launched this year. So a lot of interest.
So, I mean, there's a lot of risk for retail investors. I guess there should be safeguarding.
You know, it's complicated. So, you know, these products are very complex. Some regulatory changes in 2019 and 2020 made it easier for these to hit the market. Of course, there's volatility issues. When you get these big payouts, you know, that's the upside. The downside as well is, especially if there's leverage being taken, that can really hurt that individual investor. There's also the issue of fees. A lot of these products are just more expensive than more simple ETFs, and that's something that doesn't always come through in the TikTok videos.
I mean, this means that we're going to be asked about ETFs at dinner. I remember there was a time where actually you go for dinner with friends and they'd ask about crypto, and it was like alarm bells. And that was way before it then went down. Charlie, thanks so much. Charlie Wells. Now, the English Premier League is the richest football league in the world, and now it's being flooded with cash from the crypto world. Well, crypto firms have spent around £130 million on deals so far this season. This as they look to replace revenue from the betting industry, which is declining in the wake of tougher regulations. So let's bring in Emily Nicole, Bloomberg crypto and fintech reporter. So this is another story that's, I mean, it's a very interesting story. Why are these crypto companies now growing their footprint in football?
Well, if you think about what the landscape for crypto looked like 2 years ago, you know, it was a big boom. We'd have this before we had all the scandals and the collapses that we had then with FTX and Terra. And back then, where people were putting their money was in things like Formula One, you know, those big ticket sponsorship deals. You could sponsor an entire stadium. We have, you know, the Crypto.com Center in LA now instead of the Staples Center. This time around, companies are a bit more cautious. They've learned the lessons from the excess of 2021 and 2022, and they're thinking about where can we start getting into sponsorship again, get in front of eyeballs without the big cost, and that's football.
And so are football clubs and also leagues seeking out these deals?
On the one hand, yes, because we've got this gambling regulation coming up. So you've got, you know, there was a whistle-to-whistle ban implemented a few years ago, which means you can't have gambling ads shown between, while a game is live. And then we've also got a deal in the Premier League coming up from mid-2026 where you won't be able to have gambling sponsors in that really expensive front of shirt spot. And so clubs are starting to think about how do we replace that revenue, and crypto is kind of coming in, dipping their toes in the water, and you never know, you know, by mid-2026 when those big spots have to come up, they could be ready to spend the big bucks.
So, Emily, how are the clubs approaching some of the risks, of course, associated with crypto?
Yeah, because, you know, on the one hand, everybody thinks crypto is a really risky business. You'd think they'd have to do extra due diligence, bankruptcies, all those kind of things. They come with that extra level of scrutiny. But football's used to this, right? Gambling sponsors have been causing these issues as well over the years. So we've got things like boilerplate clauses that will allow clubs to get rid of a deal if the crypto company was to bring it into disrepute. They could also do things like ask for payments up front rather than spread over the years, so they get kind of more of that satisfaction early on. And that's the kind of things that crypto companies are facing as they enter as a new kind of sponsor into the sport.
So, Emily, talk to me a little bit about not every club is actually abandoning some of the gambling deals.
Yeah, right. Some clubs in the Premier League are still signing them. We've had a few clubs this season sign new front of shirt spots, even though those are the ones that in 2 seasons will be gone. So there definitely is still like a bit of a hanging on to the past. But crypto companies have been saying things like, you know, we'll spend a little bit here now, we'll see how it goes, we'll see what the big uptick and the results are of doing a deal like this are for us, and then if it goes well, we'll consider spending more money, and you might see them progress from like those smaller spots on the shirt sleeve to that big prime center spot.
So interesting. What a great story. Emily, thank you so much. Emily Nicole there with the very latest on the Premier League. Up next, Bloomberg Brief, Vonnie Quinn in New York, Manus Krani in Dubai, and this is Bloomberg.
about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
For our viewers worldwide, a very good morning. I'm Menace Cranny in Dubai. Vonnie Quinn alongside me in New York. Welcome to Bloomberg Brief. Let's set that agenda.
Bracing for a no landing. Short-end Treasury yields recalibrate the Fed's ability to deliver cuts. 1 year on, tensions mounting in the Middle East as Israel ramps up strikes a year after Hamas's October 7th attacks. And back to the table, Boeing and its largest labor union return to wage discussions after 2 weeks of stalemate.
Bonnie, a very good morning to you. We're recalibrating all the way around. Equity markets are really grappling with this punch higher on the yields. Max Kettner at HSBC says still go aggressively long here, aggressively overweight equities. We are recalibrating, as I said. Mohamed El Arian talks about a liquidity dominance. You're going to get big banks reporting this week, JP Morgan, Wells Fargo, and BlackRock. But I take you to ground zero of a very big recalibration. The short end of the curve, twos are now up 28 basis points in the space of 2 trading sessions. This is about trimming back the view on what more the Fed will do. 10-year government bond yields are above 4% for the first time since August the 8th. So again, this is about a market which is retethering or re-anchoring itself to 50 basis points, maybe by the end of the year. And there is less than a full probability of a 25 basis point cut in November. So we are discussing what no landing means, and would the Fed run the risk of skipping in November, as has been mooted by a number of houses. James Lord is the head of FX and EM strategy over at Morgan Stanley. James, good morning to you. Good to have you with us both. We're now at an 80% probability of only a 25 basis point cut in November. This market is recalibrating. Do they keep the insurance cuts alive?
Yeah, I mean, we're expecting to see a 25 basis point rate cut at each of the last 2 meetings from the Fed. I think it's going to take a lot for the Fed to skip a meeting. I think you're going to need to see a lot more concern coming back in about inflation. And I'm just not sure that there's enough time really left to see see the kind of data that will give the Fed that kind of concern. And I think given the starting gun on how the Fed started this easing cycle, I think it would take quite a lot for them to skip. So we're still in the camp that they do 25 basis points. But look, this is a huge change from where we were just a week ago. I mean, you mentioned the recalibration in markets. Well, I mean, the Fed's recalibrated its policy stance with its 50 basis point rate cut, and now markets are having to recalibrate their expectations of the U.S. economy, seemingly much more resilient than a lot of people felt. And I think this is going to put a little bit upside pressure on the dollar, at least in the near term.
James, you say it would take a lot for the Fed to not do another 25 plus another 25, but if we get strong inflation data Friday and we get more, jobs data in November that suggests the jobs market is still strong, then, what would maybe put a 50 back on the table?
To put another 50 basis point rate cut, you mean, in the next meeting, or to deliver the 50?
Exactly. One of the next meetings having a 50 basis point cut, so 75 by year end.
Yeah, I mean, I think the labour market data have clearly improved, and so I think in order to go back to seeing the market price in a higher probability of another 50 basis point rate cut at one of the next two meetings, I think you would need to see, again, a renewed deterioration in the labour market. Essentially, that last week's employment report was a huge head fake, and that we go back to something what the kind of run of payrolls that we saw over the summer. I mean, over the summer, it was genuinely looking like there was a clear softening, and a lot of people were revising up their expectations of Fed rate cuts again through to the last two meetings, and we'll just need to go back to that narrative. But I think there's been so much data out in the last sort of couple of weeks which have really increase the odds of a soft/no landing. That I see that the probability of another 50 basis point rate cut has been pretty low. And it's not just the employment report itself from last week, but you also had jolts earlier in the week. You had very strong services ISM. Yeah. But for me, what was really important was the revisions to the household savings data in the week prior, where one of the arguments that a lot of people used to call for a hard landing in the U.S. economy was this idea that strong consumer spending may not be so long-lasting or sustainable because households were running down their savings. Well, guess what? That savings picture looks significantly better now, and makes the consumer outlook much more rosy. So I think it's going to take a lot for the Fed to want to go another 50.
James, with all of that in mind, I look at the yen. It was the worst performing currency globally last week. I mean, down over 4%, the worst performance since 2009. Has the carry trade temporarily been relit, or will it be capped?
I think that's a good reason to think that it's coming back. I mean, you basically got carry trade survives off of low volatility. And yes, there is clearly some risk around volatility given tensions in the Middle East and so on, and the risk to oil prices associated with that. But the core in terms of global growth is looking pretty good. I mean, you've got a much healthier U.S. economy, higher chances of a soft/low landing. A lot more stimulus coming out from China. I mean, compared to a few weeks ago, the global growth situation is looking pretty rosy. And yeah, I mean, you can use the yen as a funder in this environment where yields in the U.S. look unlikely to be heading significantly lower from here, where the Fed's going to be going at a steady pace. I think there is good case for the carry trade to be coming back. Absolutely.
Moving from Japan to China, and of course it's going to be a big week in China, as you know, James. We have this quote from Goldman Sachs this morning. China equity is a further upside potential, notwithstanding the powerful rally they have staged. We estimate a further 15 to 20%. Just want to move that over to the FX space, more your specialty. Do you see as well a movement in the Chinese offshore and onshore renminbi?
Yeah, I mean, I think the sentiment towards China had clearly become extremely negative given the performance of the data, and as we were approaching U.S. election, there was clearly some hedging going on, and people had a lot of long dollar exposure. And with the changes, then the rally in the onshore equity market, there's clearly a lot of catch up where offshore equity managers are having to reallocate their exposure. That clearly benefits the renminbi. We're expecting to see some fiscal stimulus being announced tomorrow from the NDRC agency. We'll see what that press conference brings, but we're expecting to see ultimately around 2 trillion renminbi worth of fiscal stimulus that pushes the GDP run rate closer to the government's target over the next couple of quarters. And yeah, that will help the renminbi. I do think that if you're looking to fund carry trades or in EM or looking to get long dollar, it's probably easier to fund that in yen, given that we have a stronger macro trajectory in China at the moment. But equally, like as we get closer to the US election, I do think people will start to wonder about whether or not the risks around the election are appropriately priced, and it might give some people a little bit of hesitancy to really gain CNH exposure just so close to the US election. So I'm feeling quite sort of neutral on the renminbi at the moment, really, and I think if you want to get back into some carry trades in EM, yen is probably a better option.
James, can we just square off very briefly on the election? We're counting down. It is getting closer and hotter. Hedging the dollar, the cost of that's at an 18-month high. A lot of people have written about a Trump dollar trade, inflation on steroids, the Fed on pause, and less rate cuts. But I hear very little written about the Harris dollar. Briefly, what would a Harris victory mean for the dollar?
Well, I mean, we think that a Harris presidency, our U.S. public policy team and has written quite a lot about this, is going to be more consistent with what you see as the status quo. So rather than thinking about specific policies of a Harris administration, it's more to us about what is the current cycle of the global economy. What would happen in markets if we just didn't have a US election and we just continued on the current trajectory? And the current trajectory at the moment is looking like US economy is going to have a soft landing, and at least relative to the Eurozone, growth differentials, monetary policy differentials look like they're sort of moving in a direction which suggests a stronger dollar, at least on the DXY basis. I mean, I think there is a lot to be said that risk appetite is quite well supported at the moment, and that's very good for emerging markets. And so, maybe you have a little bit of a sort of split dollar in terms of the performance, but and any EM longs may be better funded in things like euro and yen. But that's really the way I would think about Harris presidency. It's just a sort of continuation of the cycle that we currently see.
James, thank you so much for joining us today. That is James Lord, head of FX for EM at Morgan Stanley. Now to other top stories trending on the terminal this morning. Boeing and its largest union are set to come back to the table to try and reach a compromise after 3 weeks of strike action. A federal mediator has summoned negotiators from both sides to discussions being held today, but the path forward remains unclear after Boeing's brash attempt to make a direct offer to workers failed 2 weeks ago.
Foxconn saw its revenue growth accelerate after it hit record sales for the third quarter. Also known as Honhai, the main manufacturer for Apple, saw a 20% surge in its sales, beating its own expectations thanks to its growing business supply service with NVIDIA AI chips inside them.
And Rio Tinto has made an approach for Arcadium Lithium, according to statements from both sides. It's the latest takeover attempt by a large miner after BHP tried to buy Anglo American earlier this year. Shares in the smaller miner have halved this year as an oversupply of lithium and weaker EV demand has weighed on the industry broadly.
Coming up, it's been 1 year since Hamas attacked Israel, and Prime Minister Netanyahu vows to press on fighting.
Is on. everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent.
Hey, ChatGPT.
Hello there. How's it going?
It's going really well. Today, I'd really like your help solving a math problem.
I'm all ears. What math problem can I help you tackle today?
So I'm going to write down a linear equation on a sheet of paper, and I'll show you. And then I'd love your help working me through it. But importantly, don't tell me the solution. Just help give me hints along the way.
Got it. Okay, I see it.
No, I didn't show you yet. Just give me help along the way. 1 second.
Whoops. I got too excited. I'm ready when you are.
So, ChatGPT, what equation did I write down there?
Ah, I see it now. You wrote down 3x plus 1 equals 4.
Yep, exactly. So what's the first step I should take to try to solve this?
The first step is to get all the terms with x on one side and the constants on the other side. So what do you think we should do with that plus 1?
Okay, I'm going to try to subtract 1 from both sides, and then I'll see what I get.
Great idea. Perfect. Now, what do you get when you subtract 1 from both sides?
Okay, so ChatGPT, this is what I ended up with. How does this look?
Spot on. Now you've isolated the term with x on one side, and it looks like 3x equal 3. What do you think we should do next to solve for x?
I'm not sure. Can you give me another hint?
Of course. You have 3x, and you want to find the value of x. Think about what operation would undo multiplication.
Is it subtraction?
Close, but think of the opposite of multiplication, because 3x means 3 times x.
Okay, I think it's division. Let me try to divide both sides by 3, and let me see what I get.
Bingo! Go ahead and divide both sides by 3.
Okay, so ChatGPT, this is what I ended up with. How does this look?
It looks perfect. You've solved it, and x equals 1. Nicely done. How do you feel about solving linear equations now?
Yeah, honestly, I'm now pretty confident I can solve linear equations. But why would you ever need to use this in the real world? I'm really skeptical.
That's a fair question. Linear equations pop up in a lot of everyday situations, even if we don't realize it. For example, calculating expenses, planning travel, cooking, and even in business for profit and loss calculations. It's basically a way to solve problems where you need to find an unknown value. Plus,
wow, okay. You know, I have a lot of unknown values in my life. I'm totally convinced I'm going to learn math now.
I love that attitude. Math can definitely help solve some of life's mysteries. Whenever you're ready to dive into more math, I'm here for you. Anything else you'd like to tackle today?
So ChatGPT, I really love that you taught the value of math to my friend Mark. And I wrote one last thing I'd love if you could take a look at.
Of course. I'd love to see what you wrote. Show it to me whenever you're ready.
Okay, so this is what I wrote down. What do you see?
I see. I love ChatGPT. That's so sweet of you.
Yeah, well, I really appreciate all the help.
Waited that one of the possibilities being discussed was a retaliation on Iran's oil infrastructure. And then, of course, he went on to give a press conference saying that they maybe could consider other targets as well. But at this point, it is unclear what Israel are going to go for, how the retaliation is going to come. But it seems as though diplomatic discussions are underway. And you will recall back in April, the first such incident when Israel did respond, it was a very targeted airstrike. They took out an air defense battery, and that was it. That was the end of it. I think this time around, the feeling from within Israel and Israeli intelligence officials is that the retaliation does have to be more potent than what they went for back in April. And therefore, that is why oil infrastructure is one of the methods that is being discussed. But they would want to do it in a way that would inflict harm on the Iranian economy, but not necessarily cause massive turmoil in global markets, which is the situation that they want to avoid. Oil experts say that one way they could do that is to target downstream assets. There's a refining capacity of about 500,000 barrels a day. Most of it goes for domestic consumption. If they did that, it would hit the Iranian economy, but not necessarily the global markets.
Indeed, well, they're producing 3.4 million barrels at the moment. Jemana, thank you very much for the update. Jemana Basecci tracking the very latest on the Middle East, right here on Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're
in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
It's Bloomberg Brief. I'm Manish Craney alongside Vonnie Quinn. To the stock story at the moment, front page news. This is what we've got for you, making headlines around the world. First up, Washington Post. The threat grows that a dangerous hurricane could hit Florida's west coast. Storm Milton is forecast to continue rapidly intensifying before slamming into the state. The worst-case scenario projection sees this storm leading to more flooding in parts of Tampa. It could lead to some neighborhoods becoming uninhabitable.
Next up, Wall Street Journal. Putin's merchant of death is back in the arms business, this time selling to the Houthis. That's the Wall Street Journal this morning. Victor Bout has returned to work brokering small arms sales to Yemen's Iran-backed militants. He was traded back to Moscow in exchange for a U.S. basketball star, if you'll remember. That was after 10 years in prison.
And Bloomberg leads with Starboard Value has taken $1 billion stake in Pfizer. Now, the activist investor has also approached the former Pfizer executives in an effort to spark a turnaround in the struggling pharma giant. That's according to Bloomberg sources. Joining us more on the story is Charlie Wells. So, Charlie, this is $1 billion stake. It's a small stake, but, I mean, Pfizer was the darling of the COVID era. The stock is underperforming. Is this vaccine rise and fall story, is there more to it than just the waning vaccine story?
Yeah, I mean, Banas, at first blush, if you look at that stock chart, you will see a precipitous decline from that peak in late 2021, a 50% decline since that point. And so people look at this and they think, you know, Pfizer needs to find another hit. And they've been trying. They've been spending a lot on M&A. We think last year to that $43 billion purchase of Seagen, the cancer maker. So they're looking there, but they've had stumbles. So they've, you know, really been trying to plow into the obesity drug market. When they look around at the likes of, say, Novo Nordisk, they've got to be jealous about the returns that they're getting on those drugs, but they've stumbled in that search for the right obesity drug, and there is dissatisfaction among investors, at least according to people familiar with the matter, with the M&A strategy so far.
So, Charlie, what will Starboard try to do to turn Pfizer around?
Really striking here. So what a person familiar with the matter said is that Starboard approached former CEO Ian Reed, who led the company from, I believe it was the year 2009, I'm going to check my dates, to about 2018, correct me on that. But interestingly, and Manis, this goes back to the point we were making earlier, this isn't just a story of a decline from, say, the middle of the pandemic to now. If you look at the share price from, say, 2009 to 2019, there was a rise of over 200% there. And so what we know about Reed, who a person familiar with the matter said has expressed interest in helping out here, we know that he was really focused on core, he was focused on vaccines, and he was focused on cancer. So we're not sure what the plans by this activist investor are now, but if they're tapping Reed, that could potentially be an indication of what they might want.
Fascinating. Charlie, thank you so much. Charlie Wells there in London for us on Pfizer. We do want to check bonds, though, because it's quite the turn of events. We have the 2-year and the 10-year both hovering at the 4% mark. Man, it's really insane when you look at this. Look at the 10-year yield above 4% now, and the 2-10 spread basically less than 1 basis point right now. As you can see, the 30-year is still at 427.30. So there's clearly more of a bid into bonds after Friday's jobs data, and as we go through the week and we wait for that inflation data. And of course, equity index futures in the United States at least are pointed lower as well. I do want to
absolutely, and sorry, Vonnie, go ahead.
Well, I was just going to show you on the terminal the chart that shows now that we're down to about 20 basis points of cuts for November and 45 of cuts for December. So we really are continuing to pull back those expectations.
Yeah, and I think this, you know, what we've got here is rising bond yields. And again, that's just exerting a different kind of pressure on the equity market this morning, both 2s and 10s above that 4% level. Again, the market got to recalibrate this soft landing to no landing. What does that mean to the fat tails of inflation risk on either side? How do we prepare for a soft landing? That is one of the questions that we will put to our next guest. We're going to catch up with Kyla Seder from State Street in preparation for a no landing coming up next on Bloomberg.
I think what's happening is we're starting to bring realism into the discussion. I mean, I think understanding the global energy system, the scale of that system, the important role that it plays in everybody's life around the world, and then thinking something that's been built over 150 years, trillions and trillions of dollars of investments that's playing such a critical role in the economies around the world, how you transition out of that system. And I would say transition from a higher carbon emission system to a lower carbon emission system. We started out with a very narrow solution set focused on wind and solar and EVs, and assumed or aspired that that would address the total set of the issue, and it doesn't. We need to be more realistic around, to Patrick's point, there are a lot of solutions that are going to be required. We should stay focused on the problem statement, which is emissions, and reducing those emissions, and less focused on exactly how to achieve that, and let every company, every sector, all technologies compete for the most cost-efficient way to reduce those emissions, and we will make progress much faster, which will mean making today's system more emissions efficient, while we introduce new systems that have lower emissions. And then with time, you will transition and we'll make progress.
DOJ or other authorities
could face bigger challenges next.
Was going to keep reading World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Bonnie Quinn with Manus Cranny in Dubai. Let's set your agenda.
Bracing for a no landing, short-end Treasury yields recalibrate the Fed's ability to deliver cuts. 1 year on, tensions mount in the Middle East as Israel ramps up strikes a year after Hamas's October the 7th attacks. And back to the table, Boeing and its largest labor union return to wage discussions after 2 weeks of stalemate. Vonnie, good morning. Bonds are on fire.
Bonds are on fire. We are seeing both the 10-year yield and the 2-year yield above 4% today for the first time since the beginning of August. It's not that far back, I guess, but you can see what kind of a rotation that we've had into and out of bonds. We're seeing back into bonds again with the 2-year yield at 399.31. We'll have to wait and see what the inflation data tells us this week. But certainly this is after the jobs data. And as we see geopolitical tensions continue to rise. For the S&P, we are looking at futures that are down about 0.6%. But remember, Friday, we did get a run-up of 0.9%. The record for the S&P is still 57.67, so we're really not that far off. And I want to point out that the VIX is above 21 as well, so there's a lot of volatility in this market. Not least in crude oil. If you look at New York crude, WTI at 76.15, that is quite the rise in just a few hours since it started trading on Sunday. Another 2.4% on top of the $5 plus that we got last week. It is October 7th, of course. That must be remembered. The latest job surprise, taking bets on another 50 basis points cut off the table for November. Let's have a quick look at where the jobs report came in on Friday to remind ourselves it was particularly strong and after a weaker 2 months. So we want to really dig in and see what this means for the economy and the Fed going forward. Joining us now is Kayla Cedar, macro multi-asset strategist at State Street. So there are competing narratives today, Kayla, right? There's obviously the geopolitical tensions that continue to ramp up. We see that in oil markets. We see it potentially in bonds. And then there's the strength of the U.S. economy. So what takes any more cuts off the table for the rest of the year, as Ed Yardeni is saying this morning?
Good morning. Thanks so much for having me. So yeah, I think when we look at the labor market data, we're getting this message that the labor market is still strong. We still see lots of jobs being added to the economy. And so when we think about what that means for Fed policy, when we're looking at November, you have to ask, is 50 basis points really necessary? And so, I think we saw that reaction in the market on Friday where, now we're down to less than 25 basis points total being priced in. And the question now turns, okay, do we need a cut in November or should we just be getting one cut? And so really looking at the agenda this week, we have CPI, and that should help add a little bit of clarity to the picture.
And the whole debate, Kayla, good morning to you, is whether we morph from soft landing to no landing, and no landing has an inflation dynamic to it, which of course then can reduce the overall destination, much less than 200 basis points if you go to no landing. How does that play out for equities? Do you invest in the tails of inflation, or do you just de-risk a little bit?
I think the big picture is we're still in a cutting and easing environment, and so that is still supportive of risk overall and still supportive of equities. However, I think when we look at where we want to be in the equity space, we still see a lot of upside for tech, especially because when we think about what would perhaps a no landing or even just a scenario where the Fed cuts less than expected, what would that look like? And so that means we could be in an environment where rates end up being higher than the market expects. And so what we've seen over the hiking cycle, or what we saw, is that tech held up very well. And so if you want to be allocated to areas where, okay, rates are maybe not falling as quickly as the market anticipates, we still like tech for that reason.
So, Kayla, you say the trade is pro-risk, pro-growth stocks, pro-tech, and so on, yet positioning is extended. Real money investors, they have an above-average historic allocation to equities. Do we need to bear that in mind?
Yeah, I think that's where volatility comes in. Because if we see volatility pick up, which we have been seeing intermittent bouts of volatility, you could see some signs of unwind. However, what we've seen so far when we see these intermittent bouts of volatility is that these unwinds don't last very long. And so, I think that means we have to buckle up and stick to our guns a little bit when it comes to tech. However, when you do want to look for opportunities to broaden out, which does make sense here, go to other quality parts of the market.
Well, Kayla, I'm looking at 2s, 10s at the moment in the curve. I know you're a fan of Steveners, but when I see shape-shifting like this, which is rolling over in the curve, is that a moment then to re-enter the Steveners that you are so bullish on?
Yeah, we saw a big move on Friday. And when we look forward from here, I do think it makes sense to look for some more signs of steepening, especially bear steepening on the long end of the curve. And so we will get auctions this week. That will help show a little bit around what demand looks like for the 10-year. But what we do see in our real money data set is that we do see a lack of demand for the 10-year relative to the 2-year. And so definitely keeping an eye on that.
Kayla, how much at State Street are you weighing what's going on with the US election, and how will that impact literally how you trade, the 1st of November versus, say, the 7th of November?
Yeah, I think, when it comes to fiscal policy, there's a lot of uncertainties out there. But one thing that does seem more certain is that there's a lack of impulse to curb the deficit. And so that really ties into some of our bear steepening ideas. When it comes to equities, it really depends on your volatility appetite. Usually we see volatility pick up pretty close to the election, and then it tends to die off. So when we look at our risk data, what we see is that markets aren't super tightly coupled. And so that's actually a good thing. That means that markets are less prone to a prolonged risk sell-off. And so if you're able to sit through a little bit of volatility, on the other end, I think things will be calmer on the other side of the election. So.
Well, certainly there's a disruption in these markets at the moment. One thing is important is earnings. If we look at the earnings outlook for the third quarter, we're going to get BlackRock, JP Morgan, a couple of airlines this week. So we're going to get into the third quarter. Earnings estimates have dropped to just sub 5% from over almost 8%. But that's still a strong innings on the earnings front for you for the third quarter, isn't it?
Yeah, and it's not abnormal to see earnings expectations revised lower heading into reporting season. So the fact that we're seeing revisions lower isn't super surprising here. I would say when we're thinking about earnings, again, it comes back to the higher quality, more profitable parts of the market. I think last quarter, especially with Q2 reports, we saw exodus out of the tech space a little bit because of concerns around earnings, how long earnings could hang on for. And so I think these revisions actually help a little bit with the market getting more in line with reality. But again, as you point out, those expectations are still strong. So, we think earnings look pretty good from here.
Okay, reality is not a bad place to check into every now and then. Kayla, thank you very much. Kayla Cedar there of State Street joining us this Monday morning. Context matters every day on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The top names in tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
President Trump must win to preserve the Constitution. He must win to preserve democracy in America. This is a must-win situation. Must win. So I have one ask for everyone in the audience, everyone who watches this video, everyone in the live stream. This one request is very important. Register to vote.
The world's richest man, Elon Musk, on stage with Donald Trump at Butler, Pennsylvania, where the former president returned over the weekend after having been shot there just 3 months ago. Joining us now from Washington is our Bloomberg government reporter, Jack Fitzpatrick. Jack, when you look at the presentation on stage, it was powerful imagery that Elon evoked at the home of the brave. So this emboldens the MAGA base, but what does it do? Does it resonate beyond that is the question.
It doesn't seem like it was meant to resonate beyond Trump's base. In fact, you heard Elon Musk, you saw him jump up and down and say that not only was he MAGA, he's dark MAGA. They made comments, the two of them, about how if Trump does not win this election, it will be the last election in the U.S. This was meant to amp up the rhetoric and play up the stakes of the debate of the election to Trump's supporters. If there is a serious attempt to win over people who are on the fence, to win over moderates, it seems to be happening elsewhere. The Trump rallies are really aimed at ramping up the base and keeping people engaged, which is largely Trump's strategy, and bringing Elon Musk out only played into that same strategy.
Jack, Kamala Harris's 60 Minutes interview on CBS airs tonight. Now, Donald Trump refused to sit down for one himself, but let's have a listen to what the Vice President had to say.
The work that we do diplomatically with the leadership of Israel is an ongoing pursuit around making clear our principles, which include the need for humanitarian aid, the need for this war to end, the need for a deal to be done, which would release the hostages and create a ceasefire.
Jack, how is Harris marking the 1 year since Hamas's October 7th attacks?
Well, both candidates have fairly straightforward commemoration events. Harris is planting a tree in commemoration on the grounds of the vice presidential residence. Trump is meeting with Jewish community leaders at one of his hotels in Miami. I think the quote there from Harris shows that she has a tougher needle to thread. She says in this, the preview of the 60 Minutes interview, that there is an important alliance between the American people and the Israeli people. But as you see, she needs to emphasize that her administration would also push for an end to the war, try to push Netanyahu into allowing more humanitarian aid. That's a more nuanced or more complex position than the Republican position, which is really hitting Democrats, saying they haven't been steadfast enough in their support for Israel and not tough enough on Iran and its proxies. So that's a hint of how she comes at this issue.
Jack, we have to leave it there. Thank you so much. That is Jack Fitzpatrick of Bloomberg Government. Staying in Washington, though, President Biden made a surprise appearance at Friday's news conference where he spoke about Israel's plans for retaliation.
The Israelis have not concluded what they're going to do in terms of a strike. That's under discussion. I think if I were in their shoes, I'd be thinking about other alternatives than striking oil fields.
Joining us now is Bloomberg's Bobby Ghosh. Bobby, today is obviously 1 year since the October 7th attacks. I'm curious as to how much more we know now about what might happen today. Iranian airspace reopened, for example, so perhaps Iran isn't expecting anything today?
Well, I think that would be foolish to write off Israel at this point. Israel has shown that once it has announced that it wants to do something, it has a tendency to deliver. The nature of the Israeli strike on Iran is unknown. We heard the president there saying he hopes that it's not on oil facilities. But Iran is a target-rich environment. There's lots of different targets that Israel can aim for. There's plenty of military targets. There's plenty of civilian infrastructure that does not necessarily include oil fields. There are oil refineries, for instance, which would hurt the Iranian economy and the Iranian regime domestically without really affecting necessarily the price of oil internationally. So there are plenty of options, and I wouldn't rule out an Israeli response. Netanyahu has said there will be one, and he would look weak if he does not deliver on that threat.
Bobby, good morning. We now have hot conflict on multiple fronts. As you said, we await the Iranian response. We await the Israeli response on Iran. But if I was to say to you, are we any clearer on what the end destination is for Netanyahu? He's a politician now who's a little bit more emboldened domestically at home, so he has a little bit of more of a wind behind him domestically than he had maybe a couple of weeks ago.
Well, he's a prime minister. He's a leader of a country, the government that is now fighting 3 wars, 2 land wars, one in the south against Hamas, one in the north against Hezbollah, as well as essentially an air war against Iran. And that's a pretty awkward position to be in. At the moment, the land wars are going very well. What we haven't heard 1 year on, what we haven't heard, what the Biden administration keeps asking for and has not yet heard, is what happens after this? What is the ultimate goal? The Israelis, Netanyahu himself, only talks in terms of destroying the enemy. Well, there's a whole discussion to be had over whether Hamas and Hezbollah are the kind of enemy that can actually be destroyed. They've certainly been greatly degraded. But then what happens in Gaza on the day after? What happens in Lebanon on the day after? As we know from wars throughout history, wars only really end when there is a political dimension, when there's a political aftermath that has been clearly defined. And there's no trace at all of that kind of a definition. And that has been a matter of frustration for the Biden administration, but that has also been a matter of anxiety for the whole region. There are many people in the Arab world that will look kindly upon Israel attacking Iran, that may not mourn the death of the leadership of Hezbollah, but even they want to know what comes after this, how to prevent this endless cycle of conflict, a period of calm, and then conflict again, how to break that cycle. We don't have any articulation from Netanyahu or any of the Israeli leadership about that.
Bobby, Iran is a $380 billion economy. Israel is a $500 billion economy. Obviously, huge populations in Israel, but 9 times that in Iran. Is there a point at which this war on many fronts becomes untenable for Israel, or indeed is there a point at which Iran cannot continue to spend on defense and even offensive strategies?
Well, for Israel, the crucial question is American support and American backing, and it has that, and unambiguously and clearly for the duration. Whatever the Biden administration says, there is a unflinching commitment to supporting Israel militarily. You keep hearing, you hear from the vice president, you hear from everybody in the administration, Israel has a right to defend itself. We'll continue to give Israel what it needs to defend itself. So as long as Israel has America's back, militarily as well as diplomatically, I think it can continue this fight really for quite a long time, despite the disparity in the size between Israel and Iran. And not just Iran, consider the whole of the network of Iranian proxies all over the region. Israel still has military superiority over all of them collectively. So as long as it has America providing substantial defense, Israel will feel that it can keep fighting.
And that is the risk here in the region, is that the escalation goes to the Strait of Hormuz, and that's something which has been flagged. That flag has been raised from various parts of the Iranian side. Bobby, thank you very much. Bobby Ghosh on the very latest conflicts. Let's get back to the bond markets. It's just gone 5:49 a.m. in New York. You're looking at, again, quite a stunning move into your notes over the past 2 sessions. You're looking at nearly 28 basis points of a spike in twos. We made it over 4%. That's for the first time there since August the 23rd. You've got 10s also trading briefly above the 4% level for the first time since the 8th of August, as these bond markets and yields reprice to a no-landing scenario from the Fed, and the possibility of a rate cut in November is dissipating. The market now pricing less than a full 25 basis point cut in November. Bonds are bid. Let's turn our back, or the yields, I should say, are bid up. Let's turn back to stocks. Now, we've got Boeing and the union there. They're set to return to the negotiating table after 2 weeks of stalemate. Workers are still holding out for better pay and pensions. Let's bring in Benedict Kamel. He's tracking the story for us. Benny, look, there's been very little movement in the past 2 weeks. The same issues for the company whole, which is junk status, cash flow. But are the unions under any more pressure as their workers are, it's getting harder for them to perhaps stay on strike?
Good morning. Yes, we were actually talking to some of the striking workers on the picket lines in the last couple of days, and the mood does seem to remain relatively upbeat. People are saying, let's hold the line. We're in this for the long haul if we have to. We've made the savings. We can make ends meet by other means. The gig economy might provide some outlet for people looking to sort of prop up their money. So there does seem to be a sense on the union side, now is the time to fight. This is as good as an opportunity as we're ever going to get. Boeing is weakened, so we are potentially in a better situation here. And it's sort of that dynamic with which they're coming back to the negotiation table. You said rightly just now, 2 weeks of very little movement, and finally they're coming back today to the table. It might be a quick resolution. It might drag out. It's really too soon to say at this point. Wages are the big sticking point, but also pensions. Boeing has offered 30%. The unions would like to see something closer to 40%. So they're not that far apart on that in that regard. But the pensions, that is a real red line for Boeing to reinstate those. So that might drag out.
All right, Benny, thank you so much for joining us today with that update on Boeing returning to the table with its labour union. Benedict Kamel there. Coming up, we'll get you set for this week, including the CPI report, and of course, big banks start to report their earnings. Context Matters on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street.
We're basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Vonnie Quinn in New York, along with Manus Cranney in Dubai. Now let's take a look at what's ahead this week. Well, we're going to hear from the Fed's Bowman, Kashkari, Bostic and Muslim. That all starts at 1 p.m. Eastern today. Then, of course, we get the latest readings on inflation coming in on Thursday and, of course, Friday. Plus, JP Morgan and Wells Fargo kicking off earnings season for the big banks on Friday.
Bonnie, let's check in on some of the individual names that are on the move. Pfizer activist Starboard coming in with $1 billion stake in Pfizer. Investors seek to turn around a lagging pharmaceutical giant. On the bid front, Arcadium Lithium, Rio Tinto makes a takeover approach. So a little bit of moves on both, but Arcadium up the most. Look, we also need to just remind ourselves, Vonnie, that we've got $69 billion worth of auctions coming down the pike this week. And we just caught up with State Street and they said, look, the appetite is going to be a little bit tougher on the 10s than it is on the 2s. And again, that goes back to the no landing and the risk of inflation 2025. So it's a big week for the bond auctions.
Huge. And Manus, look at that. We're less than a basis point now in terms of the 2s-10s spread. It's been, you know, a long time since we've seen that kind of spread between the 2s and the 10-year. 398.48 versus 399.64. It should be a few interesting sessions this week.
It will indeed. I'm in Dubai for the next couple of days. We're joined at the hip. We're counting down to CPI and the FOMC minutes. Context matters every day on Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
As we spend some time here on the broader presidential race,
Let's focus in on European politics.
Makes you wonder how politics might play out.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
This is not just a solid labor market, it's a strong labor market late in the cycle.
This is not as tight of a Fed as the market, or really as the Fed thinks it is.
It's a labor market that looks okay, and probably 50 basis points is off the table.
It doesn't feel like monetary policy needs to be acting at a fast pace. We expect it to be more gradual.
The economy is okay, and there's not any forcing issue here to cut rates.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your trading week started live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now, coming into Monday on a 4-week winning streak on the S&P 500 following a blowout payrolls report on Friday. Your scores look like this. Equity futures on the S&P down 0.5%. On a Russell, some underperformance. We're down by 0.7. On the bond board, a brand new look to the bond market in America. The 2-year through 4% earlier in the session for the first time since August, 398.89. The 2-year seeing its biggest one-week pop last week, going all the way back to June 2022. There's been some changes to some calls already. JP Morgan, Bank of America dropping their call for a 50 basis point rate cut in November. Ed Giardini on this program a little bit later saying this Fed is done for 2024.
You have to think about what Mark Rowan, Jonathan, said to you before this jobs report. Looking at where financial conditions are, looking where real estate is, he called it a very expensive insurance cut. And now what you see in the market, if you look at the Fed funds futures, everyone that was pricing in 50, that is basically a 90-degree drop. And that is why CPI this week is so important. Mohamed El-Erian, after that report, said to you, inflation is not dead.
And all of a sudden, inflation later this week becomes that more and more important. Let's look at the week ahead. We've got CPI later this week coming on Thursday. Fed minutes coming on Wednesday. Some bank earnings at the back end of the week that we'll talk about a little bit later. JP Morgan and Wells Fargo. But that much more important, CPI on Thursday.
You'd have to imagine that for the Fed, the jobs report marginally shifts them away from the fear of recession and gently towards inflation. For the market, though, it's not a gentle shift. It is, as we're talking about, pricing in less than 25 basis points of cuts for the next meeting. Bank of America says that the options market is pricing more than a 1% move in the equity market. But you know that whole thing, it's just 1 month. Take a step back, take a deep breath. I think that should count for the good data as well as the bad data.
I agree with you. November 7th, things could be very different for this Federal Reserve. There's one more jobs report still to come and an election to get through as well, if we even have a result by the time we get to that Thursday rate decision from the Federal Reserve. But we're making some moves on Wall Street. Goldman Sachs with a new year-end price target of 6K, a new 12-month price target of 6,300. Mike Wilson of Morgan Stanley upgrading the cyclicals to overweight relative to defensives.
It's really reawakened the bulls, and it's perfect. It's perfect for them. You have an economy that is still strong. You have a Fed that's still cutting. You have China dumping stimulus into the market. it's hard not to be bullish right now, John.
Your equity market pulling back just a touch on the S&P 500, down 0.5%. But check out this, the euro. The euro is negative for a 7th consecutive session. It's a break of 110 from Friday. That is the longest daily losing streak going all the way back to April 2022. Anne-Marie, two stories here. Data's better in America. Data's dreadful over in Europe.
It is dreadful over in Europe, especially basically what's going on in Germany. And many would point to basically a recession happening. The manufacturer sector there is not picking up speed. Mohamed El-Arian today in his opinion piece talking about the exceptionalism in the U.S. economy and how it's even more exceptional when you compare it to what's going on in Europe and also what's going on in China.
Euro dollar 109.61. There's one more thing I want to pick out on the screen there. It's crude. Rallying once again this morning. Danny, we're still waiting to see what the response will be from Israel to Iran.
And then we're 1 year on at this point, and we're still in a scenario where Israel is fighting two land wars, one in the air, if you want to count this fear of retaliation against Iran. This is the unknown, and that kind of bullish narrative we're talking about. It's this and U.S. elections, and those are very large unknown, John, and might hold people back from being able to go full force into this market.
Goldman Sachs over the weekend, Brent could surge to the 90s if Iran's oil supply is disrupted. I will also say over the weekend, you know, the Israeli defense minister is going to be traveling to the U.S. this week, speaking to Fox News, saying all options right now are on the table when it comes to the retaliatory hit against Iran.
Brent crude just short of 80, 79.75. Your hour ahead looks like this. We'll catch up with Katrina Dudley of Franklin Templeton in the soft landing camp, Nina Richardson of ADP ahead of the latest US CPI print, and Elliot Ackerman, former White House fellow, 1 year after Hamas attacked Israel. We begin this hour with stocks on pause after Friday's blowout payrolls report helped send the S&P 500 to the longest weekly winning streak going all the way back to May. Katrina Dudley of Franklin Templeton writing, we continue to believe in a soft landing, which is bullish for equities compared with the more bearish expectations of an imminent recession. Katrina is with us around a table here in New York. Katrina, good morning.
Good morning.
Let's start on Friday. It's like Friday never ended. What did you make of that?
I think that we've had some bullish momentum in the market. We have been in the soft landing camp for a long period of time in terms of we think that there are so many tools that have been available to be able to kind of land this economy on that landing strip and do something in terms of, you know, managing the inflation and getting that down, which I think we can kind of check mark on that. We'll see the data that comes later this week. You look at the employment outlook, it's been bullish, people are good. And so I think that the Fed has actually done a very, very good job here.
There's a feeling on Friday that good news is still good news. Equities were higher, bond yields were too. They're up again this morning by 7 basis points at the front end, on a 10-year up by 3. Should they be anxious? Should equity bulls be anxious about what's developing in the bond market again?
I think that I grew up where we used to look at the bond market and it would inform us as equity investors, and now I think that the narrative has shifted. I think that we've got so many indicators coming out of equity markets, and I think that the equity markets have been at the forefront of some of the bond markets. So,
Katrina, you also, though, mentioned some of the bearishness in the technical backdrop, the fact that hedge funds need to take down their exposure with the volatility, that corporates are in a blackout period. How much does that weigh on a potential rally in this equity market?
I think if you combine those two things, which are the kind of the hedge fund exposure, you look at the fact that we've got this blackout period, and buybacks have been a big driver of some of the earnings growth as well as the incremental buyer in the market. And then we cannot forget about the election. The election is causing uncertainty because we actually don't know who's going to win this time. And, you know, for a lot of people, that's good news because it means it's still up in the air and there's still a chance for one candidate to pull ahead. But when you have uncertainty, the market doesn't like it. You'll see, you know, the kind of those spikes in volatility, and you'll see that uncertainty get priced in.
But for risk, with a really strong backdrop, how much does the election really matter? Besides the rhetoric, the potential volatility, does it really change the long-term outcome when you have earnings and expectations are really low, a potential bar to beat, and again, a labor market that's very strong?
I think in terms of the election, first of all, I think on tariffs, we're in agreement that both parties have got incentives to continue that tariff regime. So I think that way we can kind of say, doesn't matter which side, but think about taxes. That is the area. And taxes, I always look at an income statement, it's a big number. And so if you have you've got a lot of disparity in policy, particularly as it relates to corporate taxes. And obviously, if you have a regime where there's a reduction in the corporate tax rate, that is bullish for equities and the offset. So I think that that's the unknown that we have. And no, I don't think we're going to have the next day change in tax rates. rates, but it could happen fairly quickly, particularly if you get a Republican sweep.
Well, also because TCJA is expiring next year, so taxes are completely in focus. But if you're concerned about the corporate tax rate, do you care more about the composition of Congress than you care about who's in the White House?
I still do care about who is in the White House because I think that that is the driving force. That is a representation of America. So I think that they're the person who kind of drives where we end up as a policy. I think, as a country, we have this kind of tension in that we do believe that lower taxes are good for America. They're good for American business, but we do obviously have, some fairly high deficits out there.
We do, and there's new projections actually what those deficits would look like from Washington, from the Congressional Budget Office, about whether tariffs or Trump. You mentioned inflation and tariffs. If you think both of these candidates are interested in using tariffs as a policy, and we just got data that showed wage growth accelerated, by next year, shouldn't we be concerned again with inflation?
I think on the wage growth front, that's a really big lagging indicator in terms of the inflation outlook. So I would say that any kind of job-related inflation lags what we expect to see. In terms of how do we expect tariffs to impact, it really depends on how we respond to them. If I have a company, a small company, and the alternative is to buy something domestically versus a cheaper Chinese import that suddenly gets inflated up, it's good for America because I'm doing that in-house. So I think that the inflation number, it's not directly a corollary of the fact that I'm increasing tariffs and then suddenly I'm going to see inflation in America. I think it really is going to depend on what that adjustment is. And I think a lot of companies have been doing a lot of actions where they're matching their manufacturing to where they're selling so that these tariffs may not be as impactful as we initially thought.
Let's get your equity calls. The US versus the rest of the world. Within the US, large versus small. How are you thinking about things?
I think in terms of the U.S. market, the momentum of the U.S. market, and that is something that we're bullish on. We are concerned about that concentration. We've looked at the concentration, and there's no necessary research that kind of says, well, a highly concentrated market will sell off X% because you have different situations. So on the concentration, though, that is something that worries us. We do see a situation where you can have some of these large cap companies flattish. And that means that they're going to grow their earnings, which is what the market's expecting, and they're going to grow, the valuation will decline as the earnings increase, and you kind of had a kind of tepid market return. And that's good for the overall equity market. What we're seeing is that now that bullishness in the top of the market is starting to filter down. Where I think people are focused is going straight to small caps. But I think that there's actually a really big middle in America that is getting ignored. And that's the part of the market that I actually like at the moment. The small caps, in a regime where you're anti-FTC, may not have that takeout premium. So there's a little risk there. But that mid part of the market, I think, could actually be where opportunity
is. There a sector preference within the mid caps?
In terms of sector preference, I would go towards some of the industrial names where I think that they've got that resiliency to be able to take advantage of moving things around, that they're not going to be hurt by that rising tariff regime, and maybe they've got some ability to benefit from new policy.
There has been some of that. The Mag 7, it's 30% weighted in the S&P. Bespoke points out it's only accounted for 2.9% of the index's gains so far in the second half.
Yeah.
Is it a healthier market now?
I don't think it's quite yet healthy. I think you've still got those magnificent seven still dominating. Even the numbers you quote sound very small, but it's still dominating returns and dominating the narrative. I think that what we're seeing, however, is people starting to look at what are the second derivatives of, say, the AI, and that's where they're going into the mid-cap names. I also think that some of the exposure that you're looking at in the Magnificent Seven, people are starting to say, well, maybe I don't want an NVIDIA, I want an NVIDIA that, the second derivative, so the picks and shovels.
Do you understand at this point how big cap tech reacts to lack of Fed cuts, lack of magnitude of Fed cuts at this point?
In terms of understanding, I think that we have to go back to Finance 101. I'm so sorry, but the problem with some of these names when you've got such high earnings growth expectation, which they're delivering on, let's to be very clear, any type of movement in interest rates, it's so much of the value is sitting in that terminal number that, interest rates become something that they're very, very sensitive to, even though you would say they're probably the least levered companies and they would have the least short-term exposure. but the valuation component and that terminal formula is what's really driving them.
Katrina, it's good to see you, as always. Thanks for catching up with us. Katrina Dante there of Franklin Templeton. Your equity market on the S&P 500, down by about 0.6% across the bond market. 2s out to 30s. Yield shifting higher this morning. Let's give you an update on stories elsewhere with your Bloomberg Brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. Boeing and its largest union are back at the negotiating table as they attempt to end a 3-week-old strike. Since the last meeting on September 27th, there's been little direct contact between the two sides, which remain deeply divided over a union demand to reinstate a defined benefit pension plan. But the economic pain is starting to set in for both sides. Last week, workers lost access to company-backed health care benefits, and each day the strike goes on, Boeing loses about $100 million in lost sales. Meanwhile, Pfizer shares are rising more than 2.5% in the pre-market on the news that activist investor Starboard Value has taken a stake of about $1 billion in the company. That's according to people familiar who say Starboard is seeking to mount a turnaround of the struggling pharmaceuticals giant. As part of the plan, sources tell us Starboard has approached former Pfizer executives Ian Reed and Frank D'Amelio to help, and they have expressed interest in stepping in. And Florida residents are bracing for another major hurricane less than 2 weeks after Helene killed at least 225 people across the U.S. South. Hurricane Milton could become a Category 4 storm and spark the largest evacuation in 7 years as it aims for Florida's Gulf Coast and Tampa. The storm has the potential to cause billions of dollars in damage and cause more misery for the region. Milton is forecast to make landfall on Wednesday. That's your Bloomberg Brief. John?
Yahara, thank you. It is the 1-2 punch everybody was fearing. More on that story a little bit later this morning. Up next on the program, Elon Musk hitting the campaign trail.
He created the first major American car company in generations, and his rocket company is the only reason we can now send American astronauts into space. Come here. Take over, Elon. Yes, take over.
That conversation up next. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Live from New York City this morning. Good morning and welcome to the program. Equities pulling back by about 0.5% on the S&P 500. A 10-year with a 4 handle. We're up by almost 4 basis points at 4.0% on a 10-year in America. Under surveillance this morning, Elon Musk hitting the campaign trail.
He created the first major American car company in generations, and his rocket company is the only reason we can now send American astronauts into space. Come here. Take over, Elon. Yes, take over.
This is a must-win situation. Must win. So I have one ask for everyone in the audience, everyone who watches this video, everyone on the live stream. There's one request. It's very important. Register to vote.
So here's the latest. Elon Musk hitting the campaign trail with the former president at the site of this year's assassination attempt. Elsewhere, Kamala Harris kicking off a week full of media appearances, making stops at the Howard Stern Show, The Late Show with Stephen Colbert, and The View. Bloomberg's Jack Fitzpatrick joins us now for a week full of campaigning. Jack, I just want to reflect on the weekend, how unusual it is to see the CEO of one of the biggest companies in this country campaigning with a former president. How unique is that moment?
Very unique, and it speaks to Elon Musk's place as, at the very least, a commentator and a player in U.S. politics. He was harder to pin down even just a couple of years ago, but now he is fully behind former President Trump. He's spending money on his behalf. He's someone whose politics were maybe a bit more nuanced or divided previously, but he is a supporter of Republican politics and seems determined to use his clout about as much as he can to help Trump win the election. It's a strange set of circumstances. It plays into plenty of questions about X and the future of social media's role in political communications. And yeah, it boils down to it's unique, it's strange, it's a little hard to predict the influence that it's going to have in November.
Well, let's look at some of that influence. The Musk founded America PAC. I'm on their website right now. It says join our team. Email if you're interested. Jack, the pay starts at $30 per hour with bonuses for performance. This is according to the website. How much money really is Elon Musk willing to go to back the former president?
That's a good question. It may be the case that using X to amplify voices that he wants to amplify could end up being a more significant prospect there. We've seen plenty of big spending in U.S. elections since the Citizens United decision. Elon Musk is not a unique figure because of political spending through his super PAC or anything like that, although that does show you where he's going. It's more the personality, the aggressiveness of him now very clearly taking sides, the spotlight that he has drawn for a very long time. That is what makes it more of a unique situation. There have been other people who have spent plenty of money on elections, and Musk may do so, but it's not just the money. It's really the personality, the fame, and the influence all in one that makes him a significant player.
Jack, can we think of a similar name that is doing the same for the Harris campaign?
No, but Republicans will point out, and they are correct to point out, that Democrats for a long time have had the advantage of celebrity on their side. And so you see it all over the place with a variety of celebrities. I mean, George Clooney was somebody who had a significant role, it seemed, in getting President Biden to hand off the baton to Vice President Harris as the Democratic nominee. So there may be a number of Republicans kind of saying that this is a little bit of karma in terms of the celebrity support that plays into this. There's not really one person. I would say if you're looking for an outsider who is using celebrity, fame, influence, sort of a technological side of this, there's really one person. It's just Elon Musk who's having his kind of influence on a U.S. election.
Jack, for the week ahead for Harris, John laid out the media interview she's doing. We'll hear from her 60-minute interview today. She's on The View, Howard Stern, on a podcast. A lot of the time, the language on Harris had been that it behooves her to avoid media interviews, that she's better off not doing it. What does it say about the campaign that she is committing to some now?
Well, first, it definitely says we're in crunch time. When you get that compare and contrast between Elon Musk jumping up and down, saying this is the most significant election in our lifetime, and a string of media appearances, and a pretty varied string of media appearances by Harris, from the more traditional 60 Minutes to the Call Her Daddy podcast. You can tell the pressure's on. There was a bit of a pressure campaign to get Harris to interact more with media, whether it's news media or otherwise. That seems to have gotten her out there a bit more, answering more questions, having more interactions. She put out the more detailed economic plan. It's a very, very close race. And it seems that both candidates do realize that, and I think at this point it's just very clear we're getting closer and closer to the election, and both candidates are doing everything they can.
Well, by going on Call Her Daddy in The View, I mean, that is clear, Jack, that it's a women audience, it's a women-based audience, but something like 60 Minutes, it was focused on Israel, at least the bits that we've heard so far that CBS has released. She was talking about the need to put pressure on Israel. From what we've seen, Jack, how does it come across with how the campaign is trying to convey her message around Israel?
It really highlights the difficult position that Democrats are in. They do not have as simple an answer on Israel. In the preview to the 60 Minutes interview, Harris said there is an important alliance between the American people and the Israeli people, pointing out the people almost seemed to be drawing a distinction from Netanyahu himself, but also said that she would pressure Israel to try to find a ceasefire that includes the release of hostages. Really, there's a needle that needs to be threaded by a Democratic candidate that you see in that preview to the Harris campaign that's more complex and more difficult for them than what you hear from Republicans, which is a pretty consistent cry that Democrats have not stood by Israel enough. They haven't been tough enough on Iran. And I think you'll probably see that in this 60 Minutes interview if we see more than just the preview that's come out on Israel, that she's threading a needle and trying to take a nuanced tone on a tough subject for Democrats.
Jack, just very quickly, will Congress come back to aid in the hurricane relief?
It does not seem like they will. They have what they need for immediate needs, despite some misinformation out there on exactly what's going on. They can spend as needed for Hurricane Helene and Hurricane Milton. They have put off some longer-term disaster work, so in December they'll have a lot of work to do that they could have gotten ahead on. But in terms of immediate needs, they don't actually need to come back.
Jack, got to leave it there. It's good to catch up, sir. Jan Fitzpatrick there of Bloomberg Government. Thank you. More on the hurricane season, particularly the 1-2 punch that Florida's about to take in the next couple of days. In just a moment, I want to talk about also the prospect of not being able to vote in places like North Carolina, how difficult it's going to be for some of these places.
You have to think that some of these people are still trying to get their power back. They're still trying to access clean water, let alone thinking about going out to vote in the November election.
More on that story in just a moment. Coming up on this program, we'll catch up with Neela Richardson of ADP as traders await US CPI on Thursday, and this market still reacts to payrolls from last Friday. Equities right now pulling back on the S&P 500, down by 0.5%. In the bond market, it's a 4 handle on a 10-year, and a moment ago, it was the same thing on a 2-year. Your 2-year yield in America up 7 basis points, 3.99.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Here come the bulls. Max Kettner, HSBC. This report, the payrolls report, reaffirms our very bullish stance on risk assets. Citi Stuart Kaiser, there is a window for markets to rally into the election. This morning, we pulled back just a little bit on the S&P 500. We are negative. We're down on the NASDAQ. We're down on the Russell. We're off by about 0.5% across the board here, following 4 weeks of gains on the S&P 500, the longest weekly winning streak going back to May. In the bond market, a whole new look. Yields up big time on Friday, and the move continues this morning. The 2-year up 7 basis points. The 10-year is up 3 or 4. We're back to 4% on a 10-year yield.
Yeah, I mean, what would it mean if we inverted again? I mean, that would be madness. It is the narrative back and forth, and now we can look reflexively back on the last month's data, not just on the jobs report, but on the upward revision to GDP, on the upward revision to GDI, and say, hey, things actually under the surface are looking a lot better. Consumption is still there. This economy is powering forward. Now maybe we just need to worry about inflation.
So we've gone from 50 or 25 to 50, 25 or nothing, 0. BMO's Ian Lingen on inflation. Recall the Fed is normalizing, not easing. The only thing the Fed needs to see in order to justify a quarter-point cut at its upcoming meeting is further progress on the inflation front, CPI Thursday.
If they didn't go the next meeting, if they held, would it mean that 50 looked like a mistake? What are the optics of going 0 after you just did a jumbo rate cut? That might be why they are so sensitive and maybe looking for an excuse to cut 25 next time around.
Joe Meyer, Capital Economics, says he's raising the question, quote, whether the Fed needs to cut at all in November. That 50 basis points cut, does that look like they moved too quickly? Had they known this jobs report, would they be doing 50 or potentially would that have been a 25?
We'll keep repeating this exercise. Just think about how far away November 7th feels, how different things could be. They'll have another jobs report, they'll have CPI on Thursday behind them, they'll have a decent understanding about what they're hearing from corporate America as well. And we may or may not have an election result as well that week. November 7th is still a lifetime away.
There is so much uncertainty at that point. And again, that uncertainty might make them want to cut 25, because how does it look if they went 50 before an election happens, and they don't move at all? There are just so much optics behind this, and they can say we're independent from the politics, but they can't be, because the politics ties two vastly different outcomes when it comes to things like the fiscal deficit and tariffs. So they can't be apolitical.
So that's the US side of the trade. You've got to compare and contrast that with the European side of the trade. So take a look at euro dollar. The euro negative against the dollar for a 7th consecutive day. This is the longest daily losing streak for the single currency in Europe, going all the way back to April 2022. And the two pictures right now are stark. The contrast is pretty vicious, actually. Europe is dreadful, and America, based on those numbers on Friday, is better than okay.
Well, remember that conversation we had to start the year? What does it look like if America doesn't cut and the rest of the world wants to do a cutting cycle? What if we get, say, another 25 basis point cut and we're stuck at 475 on the Fed's rate? What does that mean for Europe? Europe right now, which is trying to tackle deficits. France saying that they're delaying their ability to get within target. The UK that's talking about enacting taxes. How unappealing does European debt look if the Fed does indeed need to pause?
The next ECB decision, 10 days away. October 17th, so look out for that. Under surveillance this morning, the Middle East, marking 1 year since the October 7th Hamas attacks on Israel. Israel sending troops back to northern Gaza and ramping up strikes on Lebanon as the government weighs how to respond to Iran's missile attacks just last week.
Devastating day today as we mark 1 year. President Biden will be speaking, joined by a rabbi. There'll be a candle lighting as well as Vice President Kamala Harris. But right now, what we are dealing with on the ground in the Middle East is this concern about a broader conflict. And Israel right now is on multi-front when it comes to what they're dealing with these attacks. The biggest question remaining is how are they going to respond for Iran's most recent retaliation towards them?
Well, when this happened a year ago on October 7th, the biggest fear was a wider regional conflict. I think we can safely say that it is here. The wider regional conflict has happened. Israel is still fighting Hamas. There's still hostages in Gaza. They're now fighting in Lebanon. They're now talking about retaliation in Iran. And we don't know what's going to happen. We don't know what's going to happen here, and it's still a year on, and more is involved. It is the fear come alive.
And confronting the very real risk that the energy infrastructure in Iran might be targeted. Brent crude just short of 80 this morning, 79.70 up by more than 2%. Similar move on WTI crude through 76 at 76.19. Elsewhere, Florida preparing for the arrival of Hurricane Milton, expected to make landfall near Tampa Bay on Wednesday. The storm could reach Category 4 power and may spark the largest evacuation in 7 years. The region still recovering from Hurricane Helene less than 2 weeks ago. The 1-2 punch nobody wanted to see.
It's devastating because now they realize they are not out of the woods when it comes to potential hurricane disaster. Pine Ellis, the county that has Clearwater, that has St. Petersburg, it has a lot of long-term care facilities. They are telling all of these hospitals, all these facilities to please evacuate. The sheriff over the weekend said, we know sometimes bars and restaurants think they can ride this out and stay open. We will shut you down. There's a tremendous amount of concern right now in Florida, and they are still dealing with Hurricane Helene.
And I think that's part of the difficulty here is FEMA workers literally were just leaving Florida to go to North Carolina to clean up the debris. And now they have to turn around again. It is the allocation of resources which gets really complicated. Resources which I should say are necessary, not just to help human and preserve human life, but also with an election just weeks away. And this is hitting some areas that are crucial for these swing states, especially for the Republican candidate.
Absolutely, which is why potentially if you're a Republican, some of these states, potentially there was already early voting, you would hope that they voted already. That is why this has been politicized so much this time around. You have a lot of governors come out that are Republican. I've spoke to a few of those offices, and they said, look, we're getting everything we need from FEMA and the federal government, but the former President Donald Trump has really wanted to make this political because we are 1 month away from an election.
It's a difficult moment for that part of the country, that's for sure. Let's get you the latest on China as well. Chinese markets are still closed. I believe they reopen tomorrow. Goldman Sachs upgrading its call on Chinese stocks to overweight, expecting Chinese equities to rise another 15 to 20% if authorities deliver on stimulus measures. HSBC and BlackRock making similar calls recently in the last week, following this massive move we saw to Chinese equities going into the holiday period.
I think one of the big takeaways from this is there had been this idea there is no alternative than U.S. stocks. We're talking about how weak Europe is. Not only is China an option now, but what about the proxies? What about emerging markets, which have also been so underloved? What about European exposure to China? This changes a lot that there are stocks beyond just the U.S. So if you're bullish on this, you kind of have to be bullish on other parts of the world too.
The Hang Seng over in Hong Kong up another 1.6% to kick off the trading week. Traders bracing for a busy week of data ahead with Fed minutes on Wednesday, CPI on Thursday. Neela Richardson of ADP writing any sign of re-acceleration in service inflation would be seen as a challenge to the Fed's aggressive rate cut last month. On the other hand, a drop in core CPI could be one of the final data points the Fed needs to commit to a long-term strategy on rate cuts. Neela joins us now for more. Neela, good morning.
Good morning.
Got to start with payrolls on Friday, haven't we? I keep doing this, but I don't think the weekend ever really happened for a lot of people. Friday drops, boom, wow. How consistent was that, or inconsistent with the other data we've seen in the labour market?
You know, nothing leading up to Friday would have prepared anyone even watching closely for Friday. There were some signs that we were going to see a stronger jobs report. We saw job openings tick up a little bit. The ADP report showed some strengthening. We know that layoffs have been very, very low. And so there were signs that there was strength in the economy. But those strengths didn't lead to 254,000 jobs being created. And I think it's time to really talk about the effect of uncertainty in this economy. Because when you think about the hiring over the summer and you compare it to September, there's such a big jump. You have to wonder if firms were kind of sitting on their hands, waiting for a rate cut, waiting for a reason to hire, and they found it in September.
Let's build on that. I think it's a really important point. Are we suggesting that Fed's rate cut had an almost instantaneous impact on this labor market?
3/4 of the hiring were in sectors that are not as sensitive to interest rates. It was government hiring, leisure and hospitality, and healthcare. A rate cut doesn't have the same punch in those sectors as it would be for manufacturing. Manufacturing shed jobs in the BLS report. So that tells me that this was not a rate story. This was a certainty story. Seeing that the Fed had committed, at least it looked like, to a course of action, which was a rate cut, meant that companies now had one level of uncertainty removed from their hiring practices. Now, there's still a lot more uncertainty in the economy. You just read through the headlines of a lot more going on, but it shows the power of uncertainty and how that's very different from risk. Risk, employers can control, they can build scenarios around. Uncertainty is an unknown that they can't really ballpark, and that's the difference.
Does that also then mean that the lag of monetary policy when we are cutting is not as long and variable as it is when we are hiking?
It could mean that, for sure. I mean, what we're lacking in a data-dependent Fed is commitment. And this is a lesson for the Federal Reserve, because clarity is the antidote to uncertainty. So if they can commit to an action that will go through this preponderance of data that shows that the economy is in pretty good shape, then that gives the market something to grasp. We've gone from 2 scenarios, soft landing to hard landing, to 3 scenarios, which is no landing. That is not a great place to make decisions. The Fed could play a role providing that clarity, showing that, look, we are landing this plane and we're landing in a really great place for the economy. That's what's missing.
Well, just to that point, I mean, we're getting plenty of Fed speak. Bowman, Kashkari, Bostic, Musalem, all speaking just today, and there's plenty more throughout the week. What kind of tone do you think would help get the markets there, would help portray this after such a big jobs report, which again, it is just 1 month?
You know, you might get very different notes from all of this Fed talk. You might see maybe a Governor Bowman saying, look, this is another example of why I dissented from that 50 basis point rate cut. You might see other members of the FOMC saying, look, we're just going to look at the data and be very data dependent. I'm not sure that's going to work in their favor, because the data may show all kinds of things, especially in this 30-day period prior to an election. The data is going to be critical, but it's going to be interpreted with a slant. And so we don't have the benefit of an objective analysis of data when we have this big overlay of the election. So what I'd hope to see is some commitment to a path forward in every single speech. I don't think we'll see that.
Neela, you mentioned no landing. That seems to take on a different definition to different people. What do you subscribe a no landing to? What does it look like?
I honestly think this economy's landed months ago, and it's time for someone to call it. We've landed, it's good, we can start, we can commit to a very moderate interest rate cut given the strength we're seeing in the economy, and we don't have to get over our skis. The fact that people are hesitant, that are staying on the sidelines, not just calling this for what it is, a strong economy, is mystifying to me. So I think we can call it and end some of this uncertainty about the direction of the economy.
This brings in CPI, and we can finish there. We can still reduce interest rates in this country, even with jobs reports like Friday, so long as Thursday cooperates. Is that fair?
I think that's fair, but it's with a caveat, because what's really, hurting the Fed's case on this is not the jobs market, it's the housing market. And it's a market that the Fed can't control as easily. I mean, not to say that they can control the jobs market, but the fact that there is all this demand out there, that there's a tailwind of demographics that increase the demand for housing, and there's not enough supply, means that, service inflation is with us. And there's not a lot the Fed can do about it. So how they telegraph that is going to be very, very important.
Nita, it's good to see you. Nita Richardson of ADP. On the latest in this bond market right now, we've got a 2-year, back through 4%, up 8 basis points on a session, and the difference between a 2-year and a 10-year, dead flat, 0. nothing. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. Arcadium lithium shares are soaring in the pre-market, up 36% after Rio Tinto confirmed it's made an approach to acquire the company. Rio says the approach was non-binding and there's no certainty any deal will be agreed to. The move is yet another signal of a sector turning its attention back to growth as miners increase their exposure to metals involved in the energy transition. As early as 3 months ago, Citigroup analysts suggested Rio should buy Arcadium, with the lithium miner trading well below replacement value. Meanwhile, Nintendo shares are rising more than 4% in Japan after a senior executive with Saudi Arabia's sovereign wealth fund told local media it's considering increasing its stakes in Japanese game companies. The Saudi sovereign wealth fund is already one of Nintendo's biggest shareholders with an 8.6% stake, according to data compiled by Bloomberg. And Warner Brothers' new sequel to The Joker is off to a rough start at the box office. The highly anticipated blockbuster pulled in just $40 million in its opening weekend at U.S. theaters, falling short of even the most modest projections. The film, which returns Joaquin Phoenix to the title role and brings on Lady Gaga as his partner in crime, reportedly had a budget of over $200 million. That's more than 3 times the original movie. It's also failed to impress critics with a 33% score on Rotten Tomatoes. That's your Bloomberg Brief. John?
Yahara, thank you. Absolutely bombed. Haven't seen a trailer, but I've seen a ton of bad reviews, and I think that put a lot of people off over the weekend.
This is my bone to pick with this and other movies too. If it's a musical, tell people it's a musical. You shouldn't be sitting in a movie theater and being surprised everybody's singing all of a sudden.
I had no idea it was a musical.
Yeah, it's a musical.
But I haven't been back to the theater since the pandemic.
You don't want to sing along at the movie theater?
No,
Does it bring you
absolutely
back
not.
in?
No.
Okay. Up next on the program, 1 year of war in the Middle